Good morning, everyone. Welcome to our summer kickoff for 2018. Glad you could join us. My name is Raul Aurora. I'm the coaching and education coordinator here at Trading Winds. I may also organize the occasional event as well. This is, I believe, our fourth annual kickoff. We always like to do this because the summer trading months tend to be a little bit slower and people feel that there aren't a lot of opportunities or as many as compared to the rest of the year. But that is not necessarily true. And we've got a great lineup of speakers on today that are going to share some of their wonderful, wonderful summer strategies with you. First order of business for me always at these presentations is to let you know that yes, it'll be recorded. And two, whether you can hear us and see us clearly. If you can, please let me know by putting in some kind of affirmative note in your chat box, and we'll get started shortly. Vince, I'm not seeing, oh, there we go. Now I am seeing it. I see Karen, I see Werner, Tulio, Tumo, Daniel, Gunter's, John K was first one in. John, nice to see you. All right, let me bring in our main man, Vince Mora, for a little bit of a market chat for a few minutes before we get started with today's session. Vince, good morning to you.
Good morning.
How are you?
I'm doing well, thank you.
You rearranged your office here in your home. I'm all
So a little decluttering.
Yeah, I see that. I see that. You got I'm looking at your bookshelf right now. You've got the following books: Rework. You've got Breaking the Habit of Being Yourself and the Power of Your Subconscious Mind. Any of these relate to trading?
Absolutely.
Yeah. If you were to suggest one, Power of Your Subconscious
yes,
Mind, you've said good things about it. What's it about?
It's all about your mindset and basically how your mind controls everything, but how you can change by the way you think. You can change your health, you can change your habits, you can change just about everything. So when things aren't going well, it's really just a matter of a mind shift. It's a great book. It really is.
From the students that you've coached in the past, and I noticed our friend Steve Primo is on with us as well. We'll get his opinion when he joins us.
Excellent.
From the students that you've coached in the past, what's the biggest obstacle to success?
Themselves.
You're kidding.
No, I'm not. It was certainly my biggest obstacle. I think it's for most people. We tend to overcomplicate things. We tend to fight our own emotions. We really, when it comes to trading, need to not only simplify things from an approach standpoint, but not blame ourselves for certain things. This is a process that you have to follow and learn. And the biggest challenge for people is blaming themselves when things don't go right, blaming themselves when they miss a trade, that sort of thing. It's all an emotional, and a mindset challenge. Once you overcome that, things become very, very simple. Because from a technical level, which I'm sure you're going to see throughout today's presentations, from a technical perspective, there are a number of strategies you can use or little techniques you can use that do put the odds in your favor. It's a matter of you being able to actually follow through with those strategies and be disciplined enough to stick with it. I think that book will really help you.
All right, we'll talk more about that in a bit. Why is summer trading so challenging?
Well, we haven't really noticed it lately. I will say last summer and this summer, I really haven't, as of yet anyway, seen a dip in volume, that sort of thing. Now, August is usually the slowest month, but typically on any given summer, you'll see less volume. You'll see a number of traders going on vacation and things get a little stale, or they can be a little more volatile. We've certainly seen a lot more volatility this year, but no drop off in volume. But again, it always comes back to sticking with what you know, simplifying things, don't overanalyze, and just do what works. And we're going to be talking a lot about that today. We have some great presentations coming up.
All right. Somebody was asking if we have a schedule. Yes. So we have Vince Mora coming up in the next 30 seconds. Steve Primo following. Barry Burns will be following him. David Kino next, and Troy Epperson will wrap it up for us in a nice way, just at about 10 o'clock Pacific time.
A number of people are asking for the name of that book. How about we put it in the chat?
Putting it in right now.
Excellent.
All right, Vince. Summer Trading Kickoff.
Mm-hmm.
What are you going to teach us today?
I'm going to take a little bit of a different approach. Mine isn't just geared towards the summer. In fact, it goes way beyond the summer. I'm going to be talking about longer term trading. Um, Keeping it very simple, I'm going to actually walk you through 3 different strategies that I like to use for longer term trading. Now, those of you who have followed me for a while, you may have seen at least 2 out of these 3, possibly even all 3. Bear with me while I go through it. We will, in addition to this, be talking about leaps, specifically how to trade, how to use those to trade these 3 strategies for the longer term. And what I really like about the longer term aspect is, number one, you have time on your side. It's a lot less stressful, right? It's a lot less about timing the market. And when you're using options, specifically leaps, the right way, it makes things much easier. If you're trading dividend stocks, right away, just the dividend alone over time will mitigate a lot of your risk, if not all of it. And I'll show you how to do that. You can write calls against your positions. We can collar them. There's a strategy known as the collar trade that we'll touch on a little. All these things over the long run will not only make it easier for you and really make your probability of success much higher, but do so with very little commitment from you, time-wise. And so I'm going to try to go through as much as I can today, and we'll have a second session on this that I'll touch on later on.
With that being said, off you go.
Excellent. Thanks for being with us, everybody. Saturday morning, and I'm glad you took the time to be with us again. There's going to be a lot of great presentations today. Let's get started. I want to talk to you about the magic of leaps and long-term trading. And as Rose said, I'm Vince Moore. I'm the head trader here at Trading Winds. Been doing this for a little over 30 years. Throughout that time, I've developed several strategies and systems. I'm going to share a couple with you today. Please do remember that trading can be risky. So please don't trade with real money until you are completely comfortable with the system that you are using. Now, as I mentioned in today's presentation, I am going to briefly go over my money management rules. Many of you have probably heard these multiple times, which is a good thing. I hope they're starting to sink in. They've been very effective for me. I'm going to quickly touch on those. And then we're going to talk a bit about the winning momentum strategy, my monthly 10 strategy, and new all-time highs strategy. I hope you stick with me till the end of this presentation. I've got a little gift for you, and this really does need to all come together. There's a lot of information here that we need to put together. And of course, along the way, feel free to ask as many questions as you like. Okay, so let's get started with the money management rules. I'm going to put them all on at the same time here, just for sake of time, and run through them. The mindset that you have when you sit down to trade is extremely important. That book that we mentioned will really help you with this, I believe. And when you sit down to trade, the most important thing is that you're feeling well and you're focused, because that's what you need to do. You need to be focused. If you're anyway distracted or not feeling well, that's when mistakes are going to happen. Okay. Also, you need to be calm. You need to be relaxed, and you need to be able to follow your rules. If you're worried or stressed out or anxious, you're not going to be able to follow your rules. In fact, you'll be amazed at how much you quickly forget when you're in that state. So what allows you to be able to trade in that calm manner is, what I found anyway, the amount of money that you put into that trade. It needs to feel insignificant to you. Okay, the amount doesn't matter. What matters is that it feels completely insignificant to you. If you're at all worried about the amount of money you have in that trade, you are not going to be able to calm down and follow your rules to a T. You will get scared out early of a trade. You might adjust when you shouldn't adjust. You might double down when you shouldn't double down. All those things. So trade with an amount that feels completely insignificant to you. To control our risk, we never like to put any more than 5% of our account balance in any one trade. In fact, the goal here as you grow your account is to reduce that percentage. If you can get down to 1% of your account balance, okay, and still have a sizable trade on, that's the key. That's the real key. Because even if that trade completely blows up on you, it'll really have a very small effect on your overall balance. And that's what you want to shoot for. Okay. We always like to keep half of our account in reserve, meaning in cash. Reason being, we realize there are a number of things that are completely out of our control. Any major news announcement, any catastrophic event that happens out there that can affect the markets, we have no way of anticipating. And so there will be times when something like a 9/11 will happen, completely out of our control, but it could really drive the markets against us. If you set your orders up properly, you won't have a whole lot to worry about, but it's always good to keep cash in reserve. That way, once you come out of that event, there's usually a ton of opportunity and you can put that money to work. Also, you need to spread your trades out. Many times, day after day after day, we see examples of this where the market is really strong one day, looks like it's going to go on a run, and then the very next day completely pulls back. And whether that happens on an index like the Dow, the S&P, or the Nasdaq, or on an individual stock, we see it over and over and over again. So when you have a strong day, if you jump in with multiple orders and the very next day the market pulls back, you're going to find yourself in a huge hole right off the start. And that's exactly what we don't want to do. Okay, you want to find one, maximum two of the highest probability trade setups out there for whatever time frame you're trading. Put those on and then wait for that next session and go from there. But spread your trades out, and that way you won't get caught. A couple other sayings that we like to use here is you'll never go broke taking profits. Main reason is all the strategies that I work with usually are very conservative, take very little risk. So we can afford to take smaller profits and still do well. But I always like to include this for those of you who may just be starting out in this business. It will take time for you to get comfortable enough to remain in an order for the life of that order, for as long as you really should from a technical perspective. So until you build up that discipline and are able to stay in that order throughout the life of that trade, get used to banking your profits immediately at the beginning. Not only will it help you build your account and give you an extra buffer, allowing you to calm down, but it will give you confidence, not only in the system that you're using, but in yourself as a trader, okay, which is very important. Now, speaking about yourself as a trader, at the beginning I said that was one of the biggest challenges is going to be yourself. Here's one thing to always take away from our money management plan is this one reminder. This is not about you, and this is not about whether you're right or wrong. That's important, okay? I say it over and over again. If you're looking to be the world's greatest stock picker, you're going to lose money. You're in it for the wrong reasons, okay? This is really all about how much money you make when you're right versus how much you lose when you're wrong. In other words, it's about execution and discipline. So if you follow your rules and you follow your plan, what you should see is that A, you will have more winners and losers, but B, your winners should be much greater than your losers, okay? And you don't kick yourself when you're wrong. You go back and you look at your plan. If you followed all your rules to get into that trade, then you did nothing wrong, okay? Losses are a part of this, okay? They're a cost of doing business here. So they will happen. Your goal as a trader is to minimize them, keep them very small while allowing your winners to run. And it's a process, like I said, from the beginning. But hopefully what you see throughout the presentations today is going to help you take at least one step closer to your goal. Okay, so let's start talking about these strategies. Let me bring up my charts. Now, our winning momentum strategy, looking at the list of names here, I see a lot of familiar names. Many of you will have already been familiar with this. I'm going to go through the rules very, very quickly. But what I want to focus on is the longer term trades. The advantage of trading off a monthly chart is that normally it really smooths things out. So the day-to-day news that happens that can affect the market, you rarely see that in a monthly chart, okay? So you tend to see a much smoother chart, and it's much easier to predict. Plus, you have time on your hands. Over time, as you know, things tend to do well longer term. Now, everyone's idea of longer term could be different, right? I may think of it as 2 years, you may think of it as 20. Regardless, what I'm talking about is anything over a year for this purpose, okay? And this strategy. But what you're looking for always, no matter what your strategy you're using, in my opinion, there's two things that you should be looking for, and that's trend and momentum, okay? With those two things, you're really starting to stack the odds in your favor. And then by adding the other characteristics of the strategy, you improve on that. But trend and momentum are super important. Now, just looking at a chart like this is the SPYs, the S&P 500. Over time, you can easily tell what the trend is here. And usually, you'll be able to tell very clearly on an index chart on a monthly basis what the trend is. And we're clearly trending higher right now. Momentum-wise, we use the 20-period moving average. Simple moving average, that is, the 20-period simple moving average. And what we look for is a slope in the direction of our trade. There's a couple ways you can measure momentum. One is by the slope of the actual price bars. The other is the 20-period moving average. The reason why we like to use the 20 is, number one, when throughout that move higher, when you're getting these smaller pullbacks, these smaller retracements, we don't make the mistake of thinking that that's downward momentum, okay? When you see that price pulling back in towards that 20 and it's still sloping higher, that lets us know that that's just a temporary pullback before a continuation of that move higher. So it's very, very important that we have a slope. And the more dramatic that slope, the better it is, the more momentum there is behind that move, okay? Secondly, for trend, we like to use a stripped down version of the Ichimoku Kinko Hyo cloud indicator that you see here shaded in pink and yellow. We do remove the Kijin, Tenkin, and Chiku lines that go along with it. I'll show you here quickly in the settings. There's 5 components to this indicator. There's the Tenkin, the Kijin, and the Chiku, which are all a variation of a moving average, all separate lines, and then span A and span B are the shaded areas here. We make the Tenkin, Kijin, and Chiku invisible, and we leave the span A and span B. The way we use this for trend is if the price and the moving average are clearly above the cloud, that's an uptrend. If they're both clearly below the cloud, that's a downtrend. And if one or both are overlapping, that's a consolidating market, and we do not want to use this strategy during that time, okay? The other thing to consider is that when you get a move from one side of that cloud to the other, and you do so with slope on that 20, you see how the 20 crossed from below the cloud here back above with slope? That generally leads to a much bigger move in that direction. Okay, it's not 100%, nothing is, but it is very consistent. So you should be on the lookout for that and start creating watch lists of stocks that move from one side of the cloud to the other with a slope on that 20. Now, the most important thing on a monthly chart, or I should say that is one of the more important items that you want to focus on a monthly chart, because that's usually a real change, strong change in direction from one side to the other that could last years, as you see on the SPYs here, okay? We come through here and we spend a few years below. We cross through and we go higher for a few years. Same thing here, and now since 2012, we've been steadily higher and above the cloud. So you're not going to see a change in trend very often on the monthly, okay? Which is actually a good thing. The clearer then and smoother and more predictable the chart is, the easier it is to trade on, okay? So basically what you're looking for here, and actually before I go into the entry rules, let me tell you about the last indicator, which is at the bottom here, the RSI. Now the RSI normally has a default of 14 periods on most charting platforms. We cut that down to 7. Even though we're going to a monthly, a higher time frame, doesn't matter. We like to move that to 7, and we like a line drawn down the middle at the 50 level. Usually you'll see lines at 70 and 30 on this indicator. It's normally used to identify overbought, oversold conditions. We like to use it to identify our entries. So here's what we're looking for. Once price and the moving average move to one side of the cloud, in this case, we went from below to above, okay? What we like to do is wait for some sort of retracement, some sort of pullback towards that 20. Once we start seeing that pullback, we turn our attention to the RSI. And what we want to see is the RSI to, at a minimum, move back to the 50 line, but preferably move slightly below it and then cross back above. And it's the candle associated with the cross back above that we're interested in. That would be our setup candle. Okay? Once we've identified that setup candle, we mark the high of that setup candle, and we wait for a trade 1 tick or 1 penny above that candle. It doesn't have to be a close above. Any trade above the high of that setup candle, the candle associated with the cross from below to above that 50 line on the RSI. Once we get above there, that's our trigger to go in, okay, to take a long. The one main thing we have to confirm at that time is that we have slope on that 20, right? We want to make sure that the 20-period moving average has not flattened out or rolled over, because the more the retracement goes on for, the longer the retracement, the more that 20 will flatten and turn. So ideally what we want to see is a very sharp slope on that 20. Now here on the SPYs, you'll notice that it started to go flat, right? Didn't completely go flat, but did lose some momentum, right? Up in here, it did the same sort of thing, okay? The trades where you get that pullback in towards it, like this one here, this mini one right in here, pulls back towards it, the RSI gets to that 50 line and bounces, and we still have a nice sharp slope on that 20. Those are the ones that you should focus on the most, because they tend to lead to the biggest moves. Okay? Now, these moves can be dramatic. On a monthly chart, they can really be dramatic. The real positive aspect of using this strategy on a higher time frame is that when it doesn't go your way and it goes against you, your losses, okay, your losses are controlled and they're not dramatic. Reason being is I usually trade it with options only. And so I'm limited to what I pay for that option contract, number one, but I can also set a stop and totally control that. Meanwhile, when it makes the big run here, tons of room for profit. So going back to that formula where you want to see more winners than losers, but you really want to see much bigger winners than losers, that monthly time frame really, really helps you with that. Okay, it is so much easier to even just remain in a trade here. The trick is not to worry about the daily back and forth, right? Or the hour-to-hour movement of the stock. Okay, you have to have a longer term outlook. You know, this move here on the SPYs took about 3 years to happen. Okay, and no one's saying you have to stay in it all 3 years. You can scale out along the way. You can decide how long you want to stay in there. But you know, that was a very, very dramatic move. If you look at the entry was at the high of the June 2012 bar, which was around 130-ish, or maybe 136 even. You know, we got as high as 212 up in here, okay? and no one's saying you're going to get the full move, but even just a chunk of that, especially with a low-priced option, low-priced leap, is going to make you many, many, many times your money on that trade, and that's what we're looking for, okay? So again, you're looking for slope on that 20, you're looking for trend, meaning you want to clearly be on one side of the cloud, and you're looking for that cross of that 50 to get you in on the RSI, okay? The opposite is true for a short trade. You want to be below the cloud, you want to have a downward slope on your 20, and you want to cross from above to below that 50 line on the RSI to pinpoint your entry, okay? As far as an exit, you can use a number of different things. Lately, we've been using an ATR trailing stop indicator that we have here on TOS. You can use anything. You can use a recent pivot low, a 2-bar trailing stop. You can throw on, say, an 8 EMA and wait for a close below there. Any number of stops. Parabolic SAR. Yes. So one of our guests here, trader is what they're going by, says, would a parabolic SAR be benefit on this strategy? Absolutely. Absolutely, it would be. You could, on something like this, set your targets. You can use your fib extension tool to set overhead targets and just scale out at those levels, or just trail it along with a parabolic SAR, an ATR trailing stop, or a tighter moving average, that sort of thing. It actually becomes very, very easy. Speaking of that, let me go to the next one here quickly, which I call the monthly 10. And all this is, let me clean this up. All this is a simple price chart with a 10-period simple moving average. Can you all see the white line here for the 10 moving average, or should I change the color? Just let me know if you can see it clearly enough on your side. Okay, so this is even simpler. And then the third strategy is going to be even simpler still, okay? Trading doesn't have to be difficult. On a longer term chart like a monthly, what you're going to find with a 10-period simple moving average is that price will remain on one side of that for very long periods of time. Now, we can switch. We don't have to just go with the spies. We can use anything. If there's a symbol anyone wants to look at, by all means type it in and we can check it out. But I will tell you that my experience is it will spend a lot of time on one side of that moving average. So it is very simple to trade. And when we go through all three of these after, you'll notice how you can combine different aspects of each one to really improve your odds. But all you need to do is wait from a cross from one side to the other, okay? Very simply. Now, the bar that crosses though, so if we look down in here, when we crossed here, we moved up. This little red bar was the first one that closed on the other side of that moving average. If you just mark that high and wait for a trade above that high, that's your confirmation to go in, okay? If it didn't, then you would just sit tight, okay? In other words, see how here, back in here, and maybe I can move it along. There it is. So if you look throughout this move here, right, where you actually get a close, that's pretty much right on, maybe a little below, okay? If I marked that low here, okay, it never did get taken out, right? So then I wouldn't exit the trade I was in, or I wouldn't go short, right? And then it continues on. So now we use the break of this high to get in. Once we're in, it's the same sort of thing. If we get a close below, we mark the low of that candle, right? If it gets taken out, we exit. If not, we just let the trade ride. The other thing is, remember, the slope on that 20 equals momentum, just like on the 10, right? Any moving average, if you see a nice slope on it, that's momentum in that direction. So you could focus on the trades, and I would highly recommend it, that you focus on the trades that only happen with a slope in the direction of your trade on that moving average, okay? So in other words, here, rather than taking the initial cross from above to below the 10, okay? And you got to get comfortable with it. You got to decide how conservative or how aggressive you want to be with this approach, okay? Once you get really comfortable with it, you may just take every single cross, but you don't have to. Once it shifts, and now you know that there's a strong slope lower and you're trending to the downside, you could wait for a close above like we saw here, and then a cross back below here, and get the remainder of that move, right? Just like up in here, it shifts, it starts to slope, we wait for a close below and a close back above, and then we take the rest of that portion, okay? You can also look at where that happens. When that move is happening, is it happening right at a level of support or resistance that it's overcoming? You know, is it pulling back into a level of support and bouncing? Is it overcoming a significant level of support, meaning there's a lot more upside to come? All these little things you can add to this. But if you just look at this chart, take a step back and look at this, and look at how much time price spends below and then above and below and above, okay? So some of you might say, well, hey, let's look at a chart that isn't as predictable as the SPYs. Let's look at something really messy, right? BMRN is something that on the daily chart, have a look at that, right? Really ugly. On the monthly, it's much different, isn't it? You still have long periods of time where price spends above or below that moving average. Now, look at recently, all sideways movements. So if we were to, you know, buy when it crosses above and sell below, we'd be getting chopped. Buy, sell, buy, sell, buy, sell, right? Again, that is one of the main reasons why you want to take the trades with slope. When something is consolidating, that 10-period moving average is going to be flat. When it's trending, it's going to be sloping. So if you focus on the areas with slope, you avoid all of this chop, okay? Trader saying it might be good strategy for dividend stocks. I'm so happy you said that, because absolutely it is. All three of these are. And that takes me to the next one, which I'm going to quickly share with you. Let me just use a clean chart here. No indicators whatsoever, okay? Doesn't get any simpler than this. So now, all we need to do here is look for a new all-time high, okay? And I'll bring in the dividend aspect in a second. All you need to do is look at a new all-time high. So let's go back here, and actually let's go to the monthly chart. This is a biomed. Okay? Again, it really doesn't matter what it is that you're trading. What you're doing is looking for a brand new high. Okay, so if we go all the way back to 1999 here, this was the high. Back down in here, about $11, it had made a high, and then it pulled back. When it broke that high, it took off. Why? When it breaks an all-time high, there's no resistance up ahead. What exactly does that mean? There's no one who had bought in the past, you know, who was down on that trade and now is waiting for an opportunity to get out at break even, you know, or anything like that. There's no one like that. This has never traded at those levels before. So there's absolutely no overhead resistance, which means it's got a lot of room to run. Number two, there are a lot of traders out there looking for this exact thing. When you find something that has no overhead resistance, people like to pile in because it really is a simple way to trade. It makes a lot of sense. There's nothing holding the stock back. But secondly, or thirdly, for a stock to get to new highs, usually there's a reason behind it. Usually it's been trending strongly and making a move for whatever reason, whether it's their growth, growing rapidly, whether it's a news story, no matter what it is, there's something behind that move. Now, you can look at it two ways. You can look for stocks that, were beaten down and have consolidated for many years and then finally turn and break a high, okay, like this. So you see that after that high, it pulled back. It didn't make a new high again, a new all-time high, until 2015. But once it did, look what happened, right? It just took off. So now within here, there were other minor breaks, right? The high here, and it took off, broke the high here, came back to retest it successfully, broke the high here, and off we go. There really isn't anything that is easier than this, okay? Honestly, when you get to a new all-time high, there's nothing holding the stock back. Now, not every single one is going to work, okay? In other words, you may just get a brief little pop before a pullback. It could be a failed breakout, right? But the thing is that these moves may look small, but they're not that small. So you look at this one, we went from about 112 to a little over 130, right? About an $18 move. The way you treat that order is super important. You can get in and sell half your position with that 18-point move profit, which totally mitigates all your risk, and then let the rest of your position ride. And whether it pulls back a little or not isn't really going to affect you that much, right? There's many ways to get around it. But even if it did and it turned, you'll have your stop close by. You'll have your whatever exit strategy that'll get you out fairly quickly, so your losses remain small. Remember, the key is more winners than losers, but much bigger winners than losers. So imagine you had taken a small profit here, maybe a small loss here, but then you land this one. Boy, does it more than make up for that, right? Imagine getting in around 132 and it's currently at 427, right? Over what time period? From mid 2017 until now, a little over a year, right? You can think these are the exceptions. They're not. They're out there. Go look at monthly charts. You'll be amazed at how well this works. Now, think of it this way. Dividends, right? Bring in dividends. If you were collecting dividends throughout this time, you'd be making even more money on this. But look at it this way. Let's look at something like UNH, okay? Let's look at something like UNH. So what's happening with UNH right now? It's breaking out to a new all-time high. Look how smooth, how clean. And if we look back and we mark all the previous all-time highs, okay? When you take the little ones along the way or the major ones, what happened afterwards, right? So your technique or your challenge to have more winners than losers, honestly, with this, it's very difficult to not have more winners than losers and not to have bigger winners than your losers, right? It's really a no-brainer. But look what's happening right now. It's breaking out again. Okay? So if we look at UNH and we say, well, we're going to buy the stock, okay? Does it pay a dividend? Yeah, it does. You know what? It pays $3.60 per year, okay? Now, if I go up to the furthest option, the LEAP, the Jan 20, that gives me almost 2 years to expiration, okay? Almost 2 years. No overhead resistance. It has strong momentum behind it, that sort of thing. I can come out here and just buy an option. The 20 delta, more or less here, is the 330 strike Cost me about $6 or so, maybe a little more than that. Okay. Now, if I get a $40, $50 move, $100 move, imagine what this would be worth, right? So you can make many times your money if you catch a nice run. If it doesn't go against you, yeah, you'll lose part of that. But if and UNH may not be the right example for some of you because it's an expensive stock, $254 stock. But the price point doesn't matter. You can do this with any stock. Think of it this way. If I can afford to buy the shares and marry a put to it so I can limit my exposure. So let's go through that exercise. I'm buying the stock for $254. I'm going to go here at $330 and buy the puts. Yeah, it's going to cost me another $75 or so, right? So together with that, if I add that up minus my strike, which I can get out at, because I can at any time over the next 573 days, I can exercise my put and sell my position, my stock for $330, even though I paid $250, right? $330. So if you take that 75 plus the 255 here, minus the 330, you could come out roughly around this area, around $5-6. That's your risk. That's your exposure. Okay? That's your overall risk on that trade. Remember, it pays $3.60 a year in dividend. So we're roughly 2 years out. Double that, you're getting about $7 in dividends throughout the lifetime, right? That alone will give you a very small profit, 50 cents to $1 overall, right? So basically you're doing this for no risk at all. Your real risk here is that your money is dead money for 2 years, right? But we haven't even talked about selling calls against it and bringing in premium. We haven't talked about adjusting the put as the stock moves and collecting more premium, all of that. So there are many things you can do here to generate more income. But if you add in those dividends, you can completely mitigate your risk right off the start. And you can do this with a $60 stock. You can do it with a $300 stock. It really doesn't matter. The key is that it takes a very small amount of time. You can set these up once a month. That's all you really have to do. Well, the end of the month is coming up now in June. Right at the end of the month, we look at those closing monthly candles and we start to set up those trades for the next month. You can also, with a sizable move like this, just go even further out of the money. So I'll pick up maybe a 9-10 delta. And I know I don't like doing that normally. I like at least 20 delta, right? This is crazy. Go out with a 9-10 delta for $2. But over the next 2 years, if UNH were to make a move anywhere similar to this, anywhere, even half that move, I would end up making some real good money on that option. Okay, a lot of things you can do. Now, we don't have a lot of time left. I'll see if I can answer 1 or 2 questions, but I do want to tell you about the rest of this course. We have a pro class on this coming up on July 3rd at 1 p.m. But I think this is a very important part, or should be an important part of everyone's trading, because even if you're a day trader or you like to trade on a daily chart like I do most of the time, there's no reason why you can't have some longer term trades out there or have a retirement account aside from your active trading account that you go in and out of every day. Okay. Now, we were going to sell this for $197. That's what we usually sell this course for. I think this is important enough that all of you should have it. So as a thank you for being with us today and sticking with me through the whole presentation, we're going to give this to everyone who wants it here for free. Okay, all you have to do is go to tradingwins.com/leap. And in this class on June 3rd, which will be recorded, so if you can't join us live, you'll get the recording. What is that, Tuesday? No, July 30th. It's the following week, right?
It's the following
week, yeah. I'm not only going to recap these strategies, but we're really going to focus on leaps. How do we trade these? How do we set this up? Okay. how do we adjust those trades? If it goes wrong, can we repair them to mitigate the loss or even eliminate the loss? I'm going to go through some repair strategies with you on this. We're going to talk about generating income, so selling calls along the way and bringing in some extra money, focusing on dividend stocks, and I'll give you some resources to find those that dividend information, the ex-dividend dates, the exact payouts, all of that. Okay, so we're going to go through this in detail, plenty of examples. You can even bring some examples to the class and go for there. And also, because I do think this is that important, feel free to share this. Any friend you have that's interested in trading and wants to join us, share the link, tradingwins.com/leap. There's no credit card needed, nothing like that. Just go to tradingwins.com/leap, register for it so that you'll receive the sign-on link. Okay? And then we're going to go through, again, we're going to focus on leaps, repair strategies, generating income over the long term. But the main thing is keeping things extremely simple. Okay? So David, yes, it was tradingwins.com/leap. I don't know if you can see it here, the URL on my screen right up in here. Okay, we'll also put it in the chat.
It's also in the chat right now. We'll mention it throughout the session as well.
Any question? I know I went a little over.
We'll be here throughout the day. We'll answer questions. Excellent. I know there was a question from Karen. Karen, we'll try to answer it offline here if we can. Let me bring in Steve Primo shortly. Vince, I do want to do a quick poll question before we go forward. Dow's around 24.5 now. What's most likely to happen first? Dow to 30 or Dow to 20?
Interesting.
You can tell that most of our members are very optimistic about the market here.
Yes, I think it was when we did this poll in one of our market chats, yes. our member forums, we had what, 2/3 were thinking it was going up?
Yes.
And 1/3 down, yeah.
Okay.
With everything going on, it's going to be very, very interesting.
And you know what? We're probably at the same results now. I see. I'm going to just close it off. Let you comment quickly while I get Steve ready.
Yeah, so we had 63% said Dow 30,000 and 37 20,000.
All right, we'll continue some more of this during the session. Let me give the controls over to Steve Primo. Just give me a moment, and then we'll give him a proper intro as well.
I just want to mention throughout the day as the presenters come up, all the links to any offers they're making or anything they have to offer is in the chat box. So for the lead class, look at the link in the chat box there.
Steve, can you hear us?
Yes, I can. Hi, how you guys doing?
Very well. How are you?
Great. Thanks, Roel and Vince. I hope you can see the screen all right.
Not just yet.
Not just yet.
Give me a moment. I think I may have to hide the poll question.
Steve, it's great to have you back on us. How have you been? It's been a while since we've spoken.
Yeah, it's great to be back, Vince. Thanks for the invite. I've been fine, been very well. Just trying to manage these markets, and I love your presentation. I wanted to listen to it because I haven't heard you in a long time, and great presentation. You make it simple.
Thanks. Yeah, and I know you do the same, and I'm looking forward to yours as well. Steve has been with us before. He's presented at our live events. He's been trading and coaching for many, many years. I'm going to read a brief bio, Steve, and then I'll hand it over to you. But I want to let everyone know I'm really happy that Steve could join us today. I think you're going to be impressed with the presentation. Steve Primo has been actively involved in trading the markets for over 41 years. In 1994, he began to focus on managing money and to teach his own unique approach to trading the markets. Steve has been featured in Stocks and Commodities magazine and is a frequent contributor to many sites such as Trading Markets, FX Street, Forex Pros, and Traders Expo. His strategies are now traded across the globe in over 116 countries on 6 continents. And again, we've had him at our events many times, live and online like this. Always always great content and a lot to learn from. So, Steve, again, thank you for making time for us this Saturday morning, and I'll let you take over the controls.
Great. Okay. Thank you, guys, and thanks, Roel and Vince. And just one last question, because I'm not really technically proficient, but I just want to make sure. Are you able to see the screen now? Just or
No, not yet.
No, we're not.
okay. I think I have to press that.
There you go.
There
Now
we
we
go.
can.
Now we see it.
Okay. Great.
Okay,
Thank you,
Steve,
guys.
you've got till 35 past the hour.
Sounds great. And I just wanted to mention, I've known Vince and Roel for a while, and I always myself, even though I've been trading for about 4 decades, I always learn something when I listen to Vince. There's a lot of great information. I really suggest that you continue to listen to him and follow him, because there's a lot of great information you can always learn. It doesn't matter. There's one thing I think I agree with Vince, is that you never really graduate from trading. It's always something you're keeping, vigilant on, making sure you follow the rules and the methods. And so it's something that it requires a discipline, and also that book you mentioned, the mindset, to make sure that you're able to follow your plan and to stay positive. So this is all part of the trading game, and Vince teaches it well, and I believe in the same things. Now, in today's presentation, educational presentation, I'm going to show you 4 simple steps, and I mean really simple. These were things I was taught roughly 40 years ago, that can help to make you a consistent trader. And it doesn't matter if you're a long-term trader, if you trade options, or if you intraday trade, you can apply these 4 steps to any method, any system, any trading technique. And I feel strongly that they'll help you get onto that path that Vince was talking about earlier, and to really help you to become consistent in your trading. For example, let's look at this chart right here. Here's a chart in Adobe coming into May, prior month. Now, looking at this, you really wouldn't have any idea what it's going to do just looking at the daily bar charts. But let's say you had decided to become a buyer. Well, with the 4 simple steps I'm going to be sharing with you today, I could have verified that that was the right thing to do. And using these steps, you could have projected an exit point right here and potentially been able to capture 22.5 points, all coming into June. So this promises to be a great educational presentation. Once again, thanks for joining us today, and thanks to Vince and Roel for inviting me to speak. My name is Stephen Primo. I'm the president and founder of Specialist Trading. And about 8 years ago, I teamed up with Pro Trader Strategies, where all we do is teach and mentor our students around the world. Now, I've been trading for 41 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years, I was a specialist. That's where you get the name Specialist Trading. A specialist isn't someone who's more special than someone else. It just means that you made markets in roughly about 50 or 60 stocks. So I made markets in IBM, Waste Management, US Air. I made markets during the crash of '87 and the bull market that followed. So I've traded just about every type of market, straight up, straight down, sideways, every technique and method. I know what works in terms of consistency, and I know what doesn't. So all we do is we just teach and mentor our students so that you can be able to have these, highly consistent methods, and you won't have to, really be trading for 30, 40 years in order to find them. You'll be able to learn these right away, and they're extremely simple. Many of the things are the same things you've heard from Vince, because these are the things that work. Most traders who've been trading for a relatively short time, 3, 5, even 10 years, their plans are extremely complicated, a lot of convoluted indicators and stuff. But when you keep it simple, those are the traders who've been around for 20, 30, 40 years. And this is what we're trying to instill in all of our students around the world. So I'm going to teach you these 4 simple steps today that you can add, once again, to any method, any technique. It doesn't matter if you're trading options, futures, stocks, commodities, Bitcoin. It makes no difference, because these can apply to anything. But before we begin, I please ask that you take a moment to view our disclaimer. We're required by law to show you this. I'm going to share with you a lot of performance results on these, using these particular techniques, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view the required disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. There's our handle right there. I post different information on a daily basis, anywhere from signals that our strategies have generated to little bits of financial wisdom I've accumulated along the way. So lots of great free information on a daily basis. Feel free to follow us on Twitter. Okay, so as I stated in the very opening statements, we are an educational company. Our only goal is to educate you. You see, we feel that the reason why most traders fail is because basically you're giving your power away. You're letting someone or something make your decisions for you. And I think I'm in line with Vince in the fact that we really want to educate you and teach you so that you really know you're taking power of your trading, so you know why you purchased something, or you know why you're selling something, or you know why you're exiting. And this, in my opinion, is the only way one becomes a consistent trader. Unfortunately, our entire industry is based on selling you a master system, which you have no idea what it's based off of. You just blindly take the orders, or by listening to some guru in a chat room or on TV because he's supposed to know better than anyone else what the market's going to do. And this is, the majority of, things that people get involved with, myself included. When I first started 41 years ago, this is the way I thought you were supposed to trade. But unfortunately, that really doesn't work because you're taking yourself out of the game. All right. So what we want to do is educate you, provide you with sound fundamental things that have stood the test of time so that you can be in charge. And once again, this is how you become a consistent trader. This was the same edge that was taught to me some 41 years ago by my mentors. And this is the same edge we hope to instill in all of you as well. Now, I'll take the questions just like Vince at the very end, because I know we're limited on time here. We have some other great speakers and I don't want to take up their time. So if we stop at every slide, we might be here 2-3 hours. I don't want to do that, and I know I'd get in trouble. So let's just wait till the end of the presentation, and then I promise I'll get to each and every one of your questions, okay? So let's begin, and let's start out by sharing with you these 4 questions that my mentors taught me some 4 decades ago that you have to answer prior to every trade, that these things have to be checked off in order for you to become consistent. All right. Now, with today's increased volatility, stock trading has a high potential for consistency. But in order to be consistent, once again, you must always ask yourself these 4 questions. So what are these 4 questions? Well, let's take them step by step. Question number 1, am I on the right side of the market? Now, I know this seems too simple. Once again, I told you it's going to be tremendously simple, but trading really is simple. Unfortunately, we try to overcomplicate our trading, and that's where we get in trouble. It's ourselves that get in the way of our own trading. If we keep things simple, that's where we really start to be in sync with what the market wants to do. Now, most of the time, if you lose, if you buy something and it goes straight down, or if you sell something and it goes straight up, it's not so much that your strategy or system is faulty, not that it doesn't work. It's most likely that you're on the wrong side of the market. In other words, you're not in sync with the overall trend. So don't throw away that method that you were taught, or don't throw away what you've practiced so much for. It just could be that you're on the wrong side. So let me show and share with you what my mentors taught me and what is the simplest, most powerful way to be on the right side of the overall trend. Now, this is not the short-term trend. This is just the overall trend that can last anywhere from 2 weeks to possibly 6 months, maybe even a year. Okay, so we're looking at this chart here in Adobe, which we talked about earlier. Now, how would we know, just off this limited amount of data here, how would we know what to do? Now, let's say you had your strategy, you had a buy setup, but are we on the right side of the market? How do we know we're on the right side of the market? Here is the simplest way to know, okay? Because prices can go up and they can go down, and you can seem as if you're in some type of whipsaw or even range. But in all reality, you're really above the 50 period moving average. So what is that telling you? It's telling you that the overall trend is up. So you would be on the wrong side of the market if price was below the 50 and you wanted to buy. But since you have a buyer's bias right now, let's say your strategy technique says to buy this, well, you're on the right side of the market. So you've got half the battle done already. Now remember, this is an overall trending tool. It's not a short term, it's an overall trending tool. So you had an idea to buy here, just above that bar. Well, it's not guaranteeing that's going to be a winner, but at least you have the odds in your favor that you're in sync with the overall trend of what the market wants to do. So that's step number 1. Let's go to question number 2. Well, where do I place my initial stop? Well, most people would say, well, Steve, I don't get to that till the very end once I'm in the trade. Why do I have to figure out where I'm going to place my stop? Because you always have to manage your risk. Remember, that's the only thing you can control. We have no idea how high something will go. We don't even know if it'll go in our direction. But we do have power to control how much we're going to lose. So that's the most important thing, because believe it or not, how much we're willing or going to be losing if we're wrong is also going to determine our exit point. Now let me share with you what we mean here. Now, at our strategies and our courses, we have multiple places to place your stop, okay? Lots of ways. We have conservative traders, we have aggressive traders, we have short-term, we have long-term traders. Each one comes with a different stop variable. So you can decide for yourself what you want to risk according to your account size, according to your risk preference, and basically according to how well you want to sleep at night, because everyone's different. No two traders should trade alike. So if this is just a, I don't want to give away all the rules to our strategies and courses, but one of the most standard and generic places to place your stop is just, if you're going long, below the last short-term low, which would be right here. All right, so let's say we just decided on this generic stop right here. All right, that's our stop placement. Remember, we just got into the trade, or maybe we haven't even got in the trade yet. But if we enter at our buy area and got stopped out at our sell area, what would be the risk? Well, the risk would be 11.25 points in this particular example. Now you have to decide, well, can your account size handle that? Let's say you want to buy options. Maybe you can handle that with your account size. Let's say you want to buy an odd lot. Maybe you thought you could buy 100 shares. Now maybe you can only buy 20 shares, okay? So this is going to determine how you're getting in, what size, what instrument you're going to be using. Or it's going to determine that I can't take that amount of risk. Or maybe your account can take that amount of risk, but you won't be able to sleep at night. That's going to be a little too much knowing that you lost 11.25 points. So this is going to determine whether you should be in the trade or not. Let's say that you decided to take this, okay? Well, you know, right, prior to anything else, that this is how much you're willing to risk. So how's this going to help us setting up for question number 3? Because question number 3 now is, what is my profit target? Well, you heard Vince talking about this in the last segment, that it is so important that you make more than you lose, because that's going to keep you in the game, okay? Think of it as a basketball game. Two guys are playing one-on-one, and one guy makes more baskets than the other, but the guy who made the least baskets wins. And you think, well, how did that happen? Well, it's because he made 3-point shots. In other words, he was making more than he was making shots. So each shot counted for more. Well, it's the same way with trading, all right? If you make more than you're losing, over time, you'll be consistently profitable, okay? So we want to make more than we're willing to risk. Now, this is still a little bit too nebulous, and we like to have things cut and dry. Like, I want to know, okay, well, how much more am I going to make than I'm willing to risk? And the standard way to determine that is you always, on a minimum, want to make twice what you're willing to risk. So if we're willing to risk 11.25 points, then obviously we want to make twice that, which would be 22.5 points. So this simple way of detecting how much we're willing to risk automatically defines where we're going to be exiting, which would be at 247. So once you get into the trade, you would just place an order to sell there. That way, if you're right, you're making twice what your risk was. It's that simple. It really is no more difficult than that. Now we go to question number 4, the final question. Let's say the trade is going in your direction. How many times has this happened to people? The trade's going in your direction. You feel great, and you think, boy, this is great. I'm going to start to make some money here. This is nice. And then all of a sudden some news comes out, or some economic conditions, or maybe some financial report. Something happens to change the market, and what looked like was going to be a nice profit turns into a loss, okay? That is probably, in my opinion, the most discouraging thing as a trader. We've all been there before. It's the worst feeling. It's almost as if you would rather know right off the bat that you lost money than to be very close to a profit, be close to getting out, and then it turns into a loss, okay? So you have to have a way to protect yourself. So at least you can make a little money, or at least you get out uneven. How do we do that? Well, we apply what we call our 50% rule. This is called a fixed exit because we know that we are exiting at a fixed point. There's nothing that's changing. It doesn't change with the market. It doesn't change with an indicator. Now, we have some strategies that have changing exits. We call those dynamic exits. But this is a fixed exit because it's fixed off of your risk. So we don't have to worry about ever changing this. So since we know we entered at 224.50 and we're exiting at 247, there is a halfway point. That's our 50% level right here. So here's the way this works. When we either get close to or touch this 50% level, we are going to move our stop to unchanged. That way we protect ourselves in the event that things drastically change for the worse, okay? Now what a lot of traders like to do is they say, well, once we get to halfway to the distance of our exit point, Well, I'll sell a portion of my position. That way, even if things turn around and go sour, at least I got a little bit of money out of it. Still, other students will say, well, you know what, I'll just move my stop up. And then a lot of students will say, you know what, I don't mind even selling the majority of my stake at the 50% level and let the rest ride, okay? It's entirely up to you. Remember, you're in charge of your trading. We're just trying to give you guidelines here and signposts along the way so that you can feel comfortable. You never want to go into a trade saying, okay, what do I do now? But unfortunately, this is the way most traders trade. You need some structure. You can't just, you know, be like a leaf at the mercy of the wind and say, well, that chat room I go to, boy, they don't know what they're doing. Because as traders, we love to play the blame game. We love to let somebody make our decisions because it gives us an out. Then we can always blame them when things don't work. But if you're in total charge of your trading, if you take total responsibility, you can't blame anyone. But at the same time, you take all the credit for a winning trade. You can't say, well, gosh, I guess that money I spent on this system is paying off. I haven't paid it off yet, but it's slowly but surely paying off. I guess it works pretty well. Well, this way you can say, I'm paying myself because I got this information and it's working. So let's track price and see how it did, okay? Right off the bat, it's going in our direction, and ultimately we got to that 50% level. So if we had multiple positions, let's say we had 100 shares, we could sell a half at this level and move the rest of it up to unchanged. In other words, move our stop for 50 shares up to unchanged or so. It's up to you. And remember, this could be a mental stop. It doesn't have to be something you actually have in there. I don't know the restrictions on being able to play stops on odd lots or whatever, but it could be something you have in your mind. I know a lot of exchanges don't allow stops, but you have to have a mental stop that you stick to, that you know this is where you're going to sell, okay? So the only thing left to do now is to watch the trade unfold. My mentors told me this, at Steve, if your trading is like crazy, in other words, if you have like 10 screens in front of you, multiple televisions on, the phone ringing off the hook, you're just trading multiple markets, and it just looks like a cyclone in your trading room, well, most likely you're trading wrong, incorrectly, because it's too complicated. Trading doesn't have to be like that. They said trading, if you're doing it correctly, is actually very boring. And I know Vince knows this too, because you basically just have a plan and then you sit back and watch. It's like fishing. It's just you sit back, you put out your net or your line, and then you just sit and wait for a nibble, wait to see if it works. And that's what trading is like. It's not complicated. I have only one screen I watch. I don't watch any financial news or anything. I just basically will do that and read or watch a movie, because everything's in place. I just have to sit and watch. So we know that we've maybe moved our stop to unchanged. Well, let's just sit and watch the trade unfold. And even though it looked like it was going down sometimes, that's okay. We're protected. And ultimately, we exited at 247 for a 22.5 point gain. See how simple that is. We didn't have to listen to any news, any economic earnings, any support and resistance points. It was just very, very basic. And even though we showed you this with a stock, you can apply it to intraday futures trading, commodities, Bitcoin, monthly charts. It makes absolutely no difference. All right. Let's look at another example. This time we're going to be looking at an entirely different stock here, an entirely different idea. Let's say you're looking at this and you say, you know, Steve, the system I have, it's based off proprietary tools. Maybe it's based off of the news events. But either way, I like this. The chat room I go to says you got to buy this because the institutions are starting to buy it. The volume's picked up. And after all, we have a buy signal with my system generated on this bar. And we've broken this short-term resistance. So that's a good sign. And if you go back, we kind of have some little semblance of a short-term support here. So this is a buy to me. All right, you've justified all these reasons why you should be buying it, but you didn't ask the most important question, which is, am I on the right side of the market? Because it doesn't mean your system or your technique is wrong. It means you're out of sync with the overall trend. So how do we find out? We add the 50-period moving average. Remember, if price is above, then it's okay to buy because you're in sync with the overall trend. But where is price in relation to the 50-period moving average? Price is below. So you're actually out of sync with the market. Even though it's only been below for 6 or 7 bars, that's enough not to take that trade. It's not saying that it's not going to work, but the odds are against you. And if you had followed the trade for the next couple of days, you would have seen that you really wouldn't have had anything to show for it. Either you would have been stopped out with a small loss, or you would have been holding on to this, wondering and doubting yourself whether you should have bought it in the first place. So let's say, all right, you said, you know what? I guess I used that 50 period simple moving average and it works pretty well. So I'm not going to take this buy setup. You start to look at this and you say, guess what? This is actually a sell setup. So you're going to look to go short, all right, right there, either by the puts or actually sell short FSLR for solar. Now we go to question 2. Where do I place my initial stop? Forget about where you're going to get out with a profit. Where are you going to get out if you're wrong? Now, let's say because of this kind of moving up, moving down, you want to really protect yourself because you think maybe we could bounce up again and then bounce down. So you'll go all the way back here, which is, once again, it's up to you. This is a very risky stop because you're risking a lot of points here, but that's okay, because this is not an extremely expensive stock. So you go on to question 3 then. What is my profit target? Well, that all depends on how much we're willing to risk. Now, if we entered at our desired place here and got stopped out, we would risk 8.20 points. You have to decide, is that okay? Can you meet that? Is that enough, a risk that you're willing to take on? Is it too much risk? Once you decide if it's okay, then you simply double that. That's going to tell you where your exit is. You see how simple this is? Because you'll make twice the amount you are willing to risk. And this will change with every trade because your stop placement will be a different point. So if this meets all parameters, if you really think it can go down that far, because remember, no one knows how high or how low something will go. Trust me, I've been trading for 4 decades. I don't know how high something will go or how low. You would think after 4 decades I would have learned the secret. There is no secret. Stocks will go up or markets will go up as high as they want to and as low as they want to. Remember Enron, things go down to 0. So we don't know how high or how low something will go. We can only protect ourselves by putting in these guidelines. Now we go to the 4th and final question was, how do I protect myself? Remember, this is a fixed exit. It is fixed at 51.15. So that means that it's not going to change. So we can determine what the half point level is, which would be right here. And once price gets to the half point, we can either take a little of our profit off, sell a portion of our position, or move our stop to unchanged, mentally or physically, regardless of what you want to do. So let's track the trade, and we see there that, boy, this trade really worked out well. We can see that how being below the 50-period moving average put us on the right side of the market. It would have been the absolute wrong thing to buy. And now that we're in sync with the overall trend, we've gotten to the 50% level in 3 days. So this is great. We can take a portion of our position off, take some profits, or at the very least, move our stop down to where we entered, down here, all right? And now what's the last thing we do? We have everything in place. We've cast our line, just like fishing. The only thing left to do is watch the trade unfold. You're either going to get stopped out at break even and you won't lose anything, or you're going to have a nice profit of 2 to 1 what your risk was. So as we watch the trade unfold, we see in just 1, 2, 3, 4 more days, it got down to that level and you have a nice profit. So let's review before we go into the question and answer portion. These are the 4 questions you must always ask before any trade. And remember, it does not matter what system or what technique you're trading. These are just guidelines that are going to keep you in check, okay? I don't care if you make your decisions based off economic reports or earnings, or I don't care if you make them based off the full moon. It makes no difference, but as long as you have these guidelines, if you have a little structure, you will increase your odds for success. Remember, ask yourself, am I on the right side of the market? The market will always do what it wants to do. It's like a big river, okay? Who are we to want to swim against the current? Why should you swim upstream when you can swim with the current at your back? That's what being on the right side of the market is like. You have this current at your back, the wind at your sails, and trading is a lot simpler, all right? Then once you know if you're on the right side, where do you place your initial stop? That's all important. You think of that before you think where you're going to get out. But mostly traders, we think the opposite. When we get into a trade, we think, wow, we're going to make so much money on this. This is going to go up to here. I'm going to be swimming in cash in a couple of weeks. You should think the opposite. It's not a negative mindset. It's just a very careful one. It's just saying, listen, I want to be a winner on this trade. I feel strongly and confident that I will be, but I also have to be prudent and realize that I may lose on this. So where am I going to get out if I'm losing? And then you have to be honest with yourself. Am I willing to take on that much risk? Can I sleep at night with that risk? All right. Can my account size hold that risk, providing I have enough shares or a limited amount of shares to trade that? If it meets all your criteria, if you're okay with it, well, that's great, because that's going to determine if you want to use this as your exit point, because it will determine your profit target. You should make at least twice what that risk was. Now, some of our students like to make 3 times, even 4 times. That's fine. I just share with you a basic premise of twice what you're willing to risk. But it doesn't have to be that way. Remember, we're not here to trade for you. We're here to teach you how to trade. You decide if you want to use 2 times your risk, 3 times, 4 times, even 5 times. It's up to you, okay? We're just giving you guidelines and structure to your trading. And then lastly, how do you protect your profits? You don't want to see a profitable trade on paper turn into a loss. It's the worst feeling in the world, trust me. So what you want to do is protect yourself. When you get halfway to that point, move your stop up to where you entered, either a mental stop, however you want to do it. But just know that that's where you're going to get out if the trade turns sour. If you apply these 4 simple questions to your trading, these 4 steps, I feel strongly that you will be able to take your trading to the next level. Remember, you can apply these to Vince's methods, anyone's methods. It doesn't matter, my methods, but we feel strongly that's what will be able to have you become a consistent trader, so that you'll not just have some winning system that works great for 6 months and then blows up. These are the things you can use for a lifetime that can carry you 20, 30, 40 years into your trading career. Okay, before we go into questions, let me just tell you about a great discount we have for all of you today. We're going to offer you one of my most consistent as well as popular strategies. This is strategy number 4. And guess what? All of the 4 questions I share with you today are the actual requirements that make up the strategy. There are 2 more requirements I can't share with you because it would be giving away everything, but these make up the core of one of our most consistent strategies. This is strategy number 4, but something I was taught to some 41 years ago on the floor of the exchange. At that time, we used it for intraday trading. We were in and out of a trade in maybe 5 minutes, but we've structured it and changed things so you can stay in trades weeks, months, even years if you like. The beauty of strategy 4 is its ability to transfer over onto any market and any time frame. So I don't want you to think that it's, even though the title here, it says stock strategy, it was originally designed for that, but our students have told us that it works fantastic in other markets and in other time frames. For example, let me show you some recent strategy number 4 signals using the same things that I taught you today, just leaving out a couple of rules that I'm sorry, it wouldn't be fair to give to you for all the people that are members of our course already. Here was a signal that was generated on the 30th of May here to go long. Now you see we are above the 50-period moving average, okay? And as you can see, this was in the spiders, it went up 6 points. And you could have also used the exit points that we talked about earlier in this to get you out before the market started to go south later on in June. How about HRS? Well, where are we in relation to the 50-period moving average? We are below. So even though the stock was rising, 2 sell signals were generated using the rules and requirements of this specific pattern recognition strategy. And as you can see, it was 12 points quickly to the downside. Now, in the Canadian dollar, this is a 4-hour chart of the Canadian dollar. On the 14th of June, as you can see here, 2 buy signals were generated. And they're both above the 50-period moving average. And this was on a 4-hour chart. And coming into this past week, up 320 pips. Now, the beauty of strategy 4 is if you have a strong enough trend, it will continue to generate signals. So if you missed those 2 on the 14th, there were 2 more generated on the 18th. And then lastly, here's an hourly chart of the E-mini futures. This happened this past week on the 18th. Once again, the market was rising on an hourly time frame, but we're below the 50, so we're only going to be looking for sell setups. We had 3 sell setups generated, and eventually they kicked in for a 40-point gain here, or $2,000 potentially per contract. So we've showed you different time frames, different markets. That's the beauty of strategy 4, because it can be transferred onto all markets, all time frames. In our courses, in our online course, we give you all the different exit variables, all the different entry variables, all the stop placement, educational signal alerts. This includes the add-ons, and this comes with mentoring correspondence as well. Now, this strategy usually runs a regular price of $6.95, but because of today's presentation and our kickoff for summer with trading wins, we're going to drop the price, not $6.95, we're going to cut it in half to only $347.50. But that's for a limited time only, and that's for all the people in attendance today. So here's how to take advantage of this. You can contact my sister site, which is Pro Trader Strategies. They handle all of our marketing and all of our course discounts. You can email them at trading@protraderstrategies.com or call them directly at area code 310-598-6677. Now that link you see at the very bottom is the link that will take you to the sign up page, but that's not a live link. You'd have to copy and paste that onto your browser, but it'll automatically take you there. If you're having any difficulty, just contact Pro Trader Strategies. They have trading consultants manning the phones now, and they can answer any question, no obligation at all, and they can put you in the right direction and give you that great, great discount, okay? But that's for a limited time only. So I'm gonna leave this information up here. I believe we have about 5 or 10 minutes left. As I said, I don't want to get in anyone's way. So let me see here. Is there a question and answer portion? I guess it's in the chat box. I'll scroll down here.
Steve, I'm going to give you access.
Oh, access to the questions?
Questions
okay.
In a minute. Just give me a second.
Okay, sure. And yeah, if you have any questions now.
Let me know if you can see the questions now.
Well, appreciate it. I don't want to, I want to make distinction because I know there were some questions were asked for Vince. I just want to make sure I'm answering the right ones. I see someone say, what about averaging down to adjust your cost basis? Well, I really don't believe in averaging down because trust me, when I first started trading, that's what I used to do. And here's the thing with averaging down or averaging up if you're going short. It's like the slot machines, okay? If you go to Vegas, you know, every once in a while you get a winning, jackpot, and they're designed to do that. They're designed to do that to keep you there because ultimately, if you stay there long enough, you're going to lose everything. And that's kind of the way it is with averaging down. Every once in a while, it'll work amazingly, but if you do that, you know, it messes up your risk. It also messes up your you know, your account size. And, you know, I would, in the beginning, if you're going to average down or average up, I would leave that for the more experienced traders. People that are just starting out, use these basic rules to make sure that you're in line with your risk, okay? Question, is this useful for commodity prices? Oh, yes, it works fantastic. In fact, we have a trader who shared with us their spreadsheet on their commodity trading. They were using this for feeder cattle, for you know, crude oil, a lot of different commodities, and they were saying how strategy forwards work phenomenally with it. The same rules. And I used to trade commodities a long time ago. I don't trade them anymore. And so I looked it over. I said, wow, that's great. But so we just basically get the feedback that we get from our students. We have students that trade this on 10-minute charts of Forex markets, and they say it works well. So it depends on what market you're looking at. The only thing I would suggest is I'm sure everyone knows, the smaller time frame you go to, you're going to get more whipsaws or more noise. That's just the nature of the markets. You go to a higher time frame, even the monthly charts, like Vince was showing you, that you see a lot more of these nice trending moves. So it's all up to you. But with those larger, you know, time frames, oftentimes, not guaranteed, but oftentimes you'll have more risk. So we always ask people to paper trade first to find out what the perfect market or time frame is for them. Remember, our credo is that no two traders should ever trade alike. You have to find what works for you. That's why we give you different variables for entries, different variables for exits, different variables for stop placement. And then we work with you so that you feel comfortable, okay, using those. That's what we are as an educational company. Let me see here. Does it work with Thinkorswim? Oh, that's a great question. Because of the way Thinkorswim is structured, they won't allow us to apply our add-ons on there. So what we've done is they said, listen, we know that you may have a lot of Thinkorswim users. So if you do have Thinkorswim, what they say is you can use our data feed free. In other words, splice it off free. They allow us to do this. And then we just apply it to a free NinjaTrader platform, okay? So you can apply that onto NinjaTrader. And with NinjaTrader, we have everything set up for you, all the up and down arrows. So you'll get a free NinjaTrader platform. Also, you can continue to use your Thinkorswim platform. And so a lot of our students like to toggle back and forth, and that way they can see both at the same time. It's up to you. We also have our own platform, but contact Pro Trader Strategies. They can fill you in on the best data service, the best platform for your liking and what will work best for you. But we have ways for all the major platforms, our own, anything you're thinking of, okay? Do you not like trailing stops? What about using a trailing stop when you hit the 50% point? Sure. In other words, I explained earlier, we have multiple different stops. We have trailing stops as well. I just didn't want to go over everything to make it too complicated for some people, but trailing stops are fine, but you hit on exactly what we're talking about. If you feel comfortable switching to a trailing stop, once you hit the 50% level, then that's the right course of action for you. Now, someone may say, no, Steve, I'd rather just keep my stop at unchanged. Well, great, then that's the right course of action for you. See, there's no one right or wrong way to trade. The only wrong way to trade is when your trading doesn't make you feel comfortable. You know, I've done this before when I've traded, when I was first learning, I traded with stops or with different risk points. And even though I was in the trade, and even though some of the trades were winners, I didn't feel comfortable in the trade because it was going against my nature. Either it was keeping me in the trade too long, keep me in the trade too short. The risk was too much. The risk wasn't enough. You know, it just, I didn't feel comfortable. So that's why we give you all these different variables, and we teach you as a mentorship so that you can decide for yourself what makes you feel comfortable. Okay. Great questions, and thank you so much. I don't want to take anyone more time. I know we're almost limited here, and I want to pass it on to Raul and Vince for the next speaker. But I just want to say, if you do have questions concerning, how to use this on your platform or another one, or the price, or if you can have a payment plan, contact Pro Trader Strategies. They're willing to work with you, and as I stated, they have trained trading consultants manning the phones right now, and they can answer any suggestion that you may have. Okay, so there's lots of great information coming up. And once again, I just want to thank Raul and Vince for inviting me to speak. Always a pleasure speaking with them. And as I stated earlier, I always learn something listening to them and these presentations as well. So thank you so much. Here's the information on the screen, and I'll hand it back to Raul.
Hey, Steve, thank you so much. It's been that was great. Thank you. I wanted to put another question out there for you, and I'm not sure if you've already answered it because I just stepped back in. But a few people are wondering if you do one-on-one coaching as well. Have you? Is that something you do?
Yes, I do. I do one-on-one mentoring. Usually, what we do is we'll have and I know you do the same thing. A lot of educators do courses where we have small, intimate classes, anywhere of 5 or 8 to maybe 20 students. And this is all done online, but I also do one-on-one mentoring. I've done, believe it or not, I did a one-on-one mentoring from a student in Saudi Arabia, and we did that over Skype and stuff. And so I will do that. It's a different price, but that way it's more fine-tuned so that you can know exactly what you're looking for. And I can focus in on exactly what interests you as opposed to a small, intimate course. But once again, I would suggest contacting Pro Trader Strategies since they handle all that for me and they can give you more information.
That's great. Excellent. Well, thanks again for being with us on Saturday morning.
Thank you.
Really do appreciate it. And we'd love to have you back on very soon.
Sure.
Excellent. Okay. Thanks again. Again, everyone, the links are in the chat. And let's just see if our next speaker is ready. If not, we will maybe take a few more questions.
I do have an insightful poll question, Vince.
Sure, why not? Let's have a look at the poll question.
All right, here we go. We always like to do this in our market chats. Let me. All right. What would you rather own for the next 1 year, Vince? A real Tesla or 200 shares of Tesla? Shares of Tesla were at 330 approximately.
Yeah, and actually, that's another one that's close to breaking out to an all-time high.
That is such a difficult, for me personally, when I, when you and I chat about it, I find Tesla so difficult to keep an eye on.
I know.
Chipotle CMG is another one.
Yeah.
That just when you think you've pinned it down, it goes completely against you.
Absolutely. Tesla is interesting because there are so many different opinions out there, but we all know that, from a cash perspective, they're struggling a little, it sounds like, and it's all surrounding production issues, et cetera. But we also know that a lot of people out there are fans of their vehicles. And if they can straighten out a few issues, they could be doing quite well. Now, I always look at the chart. That's all I look at. I don't really care about financial statements or anything else. The chart says everything I need to know. And right now, the chart, it's gone on quite a bit of a run. And if we want to flip over, I mean, let me bring up a chart here.
I'll just share the results quickly before you get to the chart.
Sure.
61% would rather own shares of Tesla than a Tesla.
Yeah, there you go.
Right.
And so
let me give you the
flip
control.
over?
Yeah, give me just a second here. All right, do you have the controls yet?
I don't believe so. Let me see if I can. No, not yet. Let me try something else here. Oh, there we go. Okay. Click one more button. Okay. Everyone see my chart of Tesla? You should be able to now. This is the daily chart. As you can see, it's been very choppy, right? The kind of chart I would normally tell you to stay away from. We want something that's trending nicely one way or another. This has been all over the map. Looking at the monthly chart, you can see that we're getting closer. We pulled back the last couple of days, but we're not far from those all-time highs. And if we can break this level here, this 389, I think Tesla will go on a real nice run. The other thing I liked about it is that we came back to test these prior highs and held. So if we can finish the month up here, and especially if we can get back above those highs, I would definitely be interested in purchasing some Tesla here for the next little while. I think it would look quite nice, do quite nicely.
Question that always comes up is Tesla shares always very expensive, $330 or so approximately.
Yeah. Mm-hmm.
Options are always richly priced, call options especially.
They are.
What are you looking at here for strikes and expirations?
And there's ways to get around that. First of all, from a monthly perspective, since you expect to be in the position for quite some time, you can go a little further out. We could look at let's go back to that monthly chart, take our fib extension tool, take the most recent low to high here, and let's see what kind of upside targets we'd be looking at. Then we can look at the options. So we're looking at 523, let's just call it 520, the 1618 level, eventually 736. Let's not even go there. Let's look at about 500 as our target, right? So we go to the 500 strike here. Yeah, they're about 32 points. Expensive. Oh, we don't even have the deltas available. I wonder why that is. Well, that doesn't help. We really do need the deltas. Let's see if something a little closer. No, for some reason. Sometimes on the weekend on TOS, we don't see the actual figures. But you could go out, to a 20 delta. They won't be nearly as expensive, but you can also do a spread, right? You can buy, say, the 500 strike and sell the 550 against it, that sort of thing, to really lower the cost of your spread. You're capping your upside to a certain extent, but you're able to enter that market that otherwise you wouldn't be able to afford that way. Again, if you can buy the stock in a put, that's a whole other way. But there are many ways to do it. You can also lower your time frame. I mean, that's always a choice. If the monthly triggers, okay, let's say we get a break above this 389, so over the next few months it should be heading higher. That's what the charts are telling you. Then you wait for a proper setup on the daily, right? Once it turns and it clears this, you will have momentum on your side, and it'll start to look much different. And so once we clear this level, we throw on our other indicators, and it can look much different. So you won't necessarily have to pay, say, $30 for an option contract. If you go, say, 90 days out here, going further out, you can get down to the single digits. We don't have the deltas here, but they're usually 8-9 points for a 20 delta.
We're just at 35 minutes past 8 a.m. on the West Coast, 11:35 a.m. on the East. We're waiting for our friend Barry Burns to join us for his presentation, if in the event that he can't. I'm sure Vince has material that he can cover for hours and hours.
Why don't we open it up? don't we open up until he joins us?
Beautiful.
Let's
Let's do
open it
that.
up.
All right. I do have a question that just came in. Yes, if you have any similar requests or if you have any questions about trading in general, please put them in. Vince, how do you feel about weekly options? And again, a lot of the folks that have signed up, I only see the name as traders, so my apologies. If you would like to put in your first name as well with your question, I'd be happy to mention that as well.
I like weekly options, especially with hourly charts on stocks over $100. So Tesla would be perfect. Tesla can give you some really, really nice trades on the hourly chart. Let's just throw on, let's go back to our, winning momentum strategy layout here just for a sec, throw on some indicators. You can see if I zoom in here on the hourly, okay, it's been a choppy week, a lot of gaps, not ideal. But here in the past, here was a nice one. We broke through that cloud, right, with slope. That was the key. So we figured a bigger move was coming. We got that retracement into that 20. There's the cross of the RSI 50. And so from about, oh, sorry, that's the Dow. What am I looking at? Let me go back to Tesla on the 1 hour. Oops, let's try that again. My mistake. Tesla. Oh boy. What's happening here? Tesla. Let me just give my charts a second to refresh here. There we go. Tesla on the hourly. So let's go back. And there it is, similar move. These pullbacks back to that 50 and crosses. And that's what you're looking for. You have slope in that direction. So you have trend and momentum on your side. You go from about 320 up to 370 or so. It's very common to get 10, 20, $30 moves in over, in less than a week on these. So when you're dealing with weekly options, they're going to be a lot less expensive, right? Let's go out to next Friday here, and you can see, again, we don't have the benefit of the deltas, but you can get into the low single digits cost-wise. And, you pick up a $3, $4 option and the stock goes up 20 points, that's going to be a very healthy return.
Penny says, Vince, can you discuss Micron, MU? Thanks.
Sure. Let's have a look at MU. Let's go back to daily first of all. MU. So Micron pulled back the last couple of days, just like everything else. It also reported earnings. So it's lost a bit of momentum on the daily chart, but it looked like it was near highs here. Let's have a look at the weekly. The weekly's been trending, so this pullback could actually work in our favor. On a weekly time frame, a bit more of a pullback closer to that 20, allowing the RSI to get back to that 50 and then turn. Could be an opportunity in the weeks ahead. Let's look at it on a monthly. And there we go. You see, going back to what we talked about earlier this morning, the stock gets beat up. It consolidates over a number of years, and once the highs get taken out, these were the highs of that consolidation. It took off, okay, came back down. Now it's crossed that cloud with slope, cleared another high, and it's already gone much higher, and continues. So I think Micron's on its way back to these highs here at 97. So, that's almost a double of where we are now. So whether you want to buy some leaps here and hold on to it, or buy the stock and hold, or whether you want to go back to the daily and wait for the next proper setup, any way you want to trade this, but it looks like Micron's on the way to 97.
Vincenzo is asking.
Good name.
Great name, I know. He says, Vince, could you please explain what the indicator with the pink and yellow color is?
So that's the Ichimoku Kinko Hyo indicator. I hope my pronunciation is correct. This is an indicator that otherwise known as the cloud indicator. Very, very popular over in Asia for many, many years. Actually, it can actually be used as a strategy in itself. Okay. Now, let me go on for a second and throw on the other parts of this indicator, just so you know what it generally looks like. It has these 5 parts to it: the Tenkin, the Kijin, the Chiku, And span A and span B are the shaded areas that you see. Now, these are all moving averages, but they're calculated slightly differently. So you see here, if you can see all these lines, there's a method to this madness, but what I like to do is just use the cloud portion for trend. Okay, so I normally remove the other 3 lines, use the cloud portion for trend, and if price and the moving average are above the cloud, the shaded area, that's an uptrend. If they're both below, that's a downtrend. If one or both are overlapping one of the shaded areas, we do not use this strategy at that time. That's a period of consolidation. But as I said this morning, one of your biggest opportunities using this cloud is watching that 20 period moving average come through that cloud. If it comes through with slope, it generally leads to a much bigger move in that direction. Okay. It's not perfect, not 100%, but more often than not, if it comes through with slope, and the more significant that slope, the bigger the move.
Boeing was one that was requested. I'll get you the name of
Sure.
who it was that did that. It was HG. Thank you.
Boeing. So right now it's pulled back and it's testing that cloud. It's testing a level of support here. If it breaks below here, and especially if it breaks below these lows here around 310, that could spell trouble for Boeing. But if it holds here and bounces and takes out these recent highs, that's a real opportunity for Boeing. So right now, you know, if you look at this, we've been range bound, and you can call this a channel, call it whatever you want. We've been in a range for a while. And what we need to do is wait for a break one way or the other. Okay? Once it does, we'll know the next near-term direction of that. From a longer time frame, Boeing still looks pretty good. The weekly's lost momentum, but the monthly still looks fantastic. So if we can get it back above 375 here, we'd be off and running once again. But here's the thing. When the stock takes off like this, you see Boeing made a move from about 150 or so to where we are now, almost on a straight line up once it broke these highs. Again, breaking the all-time highs, extremely powerful, right? We cleared it, had nothing standing in our way, and this thing took off. Now, when it pulls back like this, if it breaks support, okay, you can see that there's really no support until we get back down to that level. So it could quickly reverse. And that's why we have to be diligent. And if this trade starts to go against us, we need to get out as quickly as possible. Okay, but that's the range. Any breakout from that range should lead to a substantial move.
Evans. Headline at CNBC says Mark Benioff from Salesforce, Oprah, and 3 other business leaders say this habit is key to their success. Is it waking up early, getting enough sleep, or meditation?
Wow, I think all 3 are. In my case, I would say getting up early.
It's actually meditation.
Meditation, yeah. Meditation. I mean, but all 3 are fantastic. But
all right, look who's here. Spiros, our friend from New York. Spiros, nice to see you. He says, Vince, do you have any favorite stocks you're trading weekly options on an hourly chart? What do you want to share? What do you want to share with us today? What's the delta you usually choose for weekly options? Thanks.
So it varies. So the FANG stocks, all the techs like NVIDIA, all of the big name stocks, again, I'll look at anything over $100 on that hourly with weekly options. But the big names I really like. And I lost my train of thought. Oh, with the deltas, going back to the deltas. So recently, what I've been doing is experimenting with further out deltas. So, for example, here, if we go on Facebook and I expect to move, let's say we get a setup and I go look at the weeklies. Instead of sticking with a 20 delta at the furthest, I'll go out to the 10 to 12 delta range here. So for example, I'd pick up the 210 about 40 cents a contract, okay? 40 cents a contract. That would allow me to buy a lot more contracts. Now, generally, when you're talking about weeklies, if you're looking for a smaller move, you want to go in the money, right? They're less expensive, they're more affordable, etc. But it always comes down to measuring that move. So with strong momentum, strong trend in place, no resistance up ahead, sky's the limit, right? I still plot my fibs to see what my overhead targets would be. And if they're anywhere near the range of that 10 delta, in other words, what I'd like to see is the stock get up to that range, right? But if we were to go back and look at prior moves, the number of contracts that you have makes a big difference, right? So if, for example, I was going to buy the at the money for $2, okay, and I was going to buy 10 contracts, that would cost me $2,000, right? That I'd be risking. If I can pick them up for 40 cents, right, I can get more than 4 times the number of contracts. So instead of having 10 contracts, I could probably pick up 45 contracts for the same amount of money, right? And if this thing makes a 10-point move, I'd end up making a lot more money with these than those. That's what I'm experimenting with lately. But you do need a sizable move for it to work out. But even just sticking to 20 and higher on the delta, on a stock that can move, meaning, anything over $100 a share normally has a high ATR, right? Average true range. It could move $8-10 in a day. So that's what really matters, movement.
All right, let's go. Joseph. Joseph says, Vince, can you use this for Forex?
Oh, sure, absolutely. You can use it on anything. Whether any of the strategies I talked about today, you can. Generally, not a lot of people look at monthly time frames for Forex, but it works the exact same way. I mean, look, here's the USD CAD, right, on a monthly. Look at that move coming through that cloud with slope. What happened next? It dropped. It went from about $1.45 down to 90 cents, right? A huge move. You're talking pips here. That's massive, right? All these pullbacks were a shorting opportunity, right? Very clean. If you're looking at just the break of the highs, if you wanted just a clean chart, right, and look at the USD CAD, right, just look at a break of the highs. Now this is the daily, okay? You look at the monthly, you clear the, in this case, clearing the lows, right? And it collapses, right? Once you consolidate a while and you clear the highs, look at this high down here, right? Clears it, comes back to retest it. Textbook, absolutely textbook. Very easy to spot, very easy to use. And these techniques, by the way, it doesn't matter the time frame. In a way it doesn't, in a way it doesn't. What I mean is any technique that's based on technical analysis, okay? The higher the time frame, the more accurate it's always going to be. But it doesn't mean you can't use it on an hourly, on a 5-minute, right? Here's the hourly, okay? And we go back. What are we going back here? From June to February, okay? About 4 months. You take the 4-month high. Once the 4-month high broke, what happened? The stock just took off, right? So it works the same way. Let's go to 5 minutes, right? You go to 5 minutes. Once these highs were broken, right, it took off, okay? It's the same kind of thing. If you can use your winning momentum strategy or anything else, it's purely technical analysis, but the higher the time frame, the better. But yes, they absolutely work with Forex.
CMG is next.
CMG, let's look at that on a monthly. Now we have nothing on here but price, okay? But what are we approaching? We're approaching another high here, okay? And if you look at a bigger picture, right, this could be a huge potential double bottom, right? What do we need to see for a double bottom is a break of the highs, the highest point between those two bottoms. Now that's far away, that's the all-time high. But imagine if we were to get up there, not only will we have no overhead resistance, okay, but we will have put in a massive double bottom on a monthly chart. That's very, very significant. If Chipotle can ever get back here, it will go on a substantial run ahead of that. Okay, we're far from there. How do we play it up to that point? Well, any break of the high, any break of a previous high will mean the next step in that ladder, right? If we then pull back, then we look for a break of this high, right? Why did I pick that level? Well, because when we move up here and you hit this previous low, that's overhead resistance. You're likely to hit it, bounce back, but once you break through that level again, right, you're off and running again. So the other thing I didn't say this morning is that a different chart view that really helps you with this is by switching from candlesticks or regular bar charts to a line chart. These points on a line chart identify those high and low pivots, okay? So it's very clear to spot the highs and lows, okay? It's just that these are based on the closing prices, but that's really the most important price you should be looking at. So line charts are extremely important. The other benefit of line charts is that they allow you to remain calm. I mean, think of it. If I was looking for a break of this high and I got it here and I went long right in this area, if I'm looking at this line, it's very different than looking at candlesticks, right, or bar charts. So within here, I'm sure there's a lot of up and down along the way. There's green candles, there's red candles, right? I don't see any of that. I just see a line, a gray line. So how can I get nervous, right? How can I be second guessing myself? If there's a big red candle in here, I'm going to be wondering, oh, have I made the wrong decision? Is it about to turn on me? Am I going to give up my profits? All those thoughts go through your head. Like this, it's plain and simple, right? If I take a break of the high, I'm either going to follow it along with a trailing stop of some sort, okay? Or I'm going to mark a previous low as my exit and allow this to run. Now, if it goes and it moves 20, 30 points, whatever, that's a healthy profit. I'll start taking profits and then I'll take another one here, etc., right? But once I see this pullback and then it turns, it doesn't breach any of my stops, it turns and I see it break another high, well, now I may buy more, right? Or at least I know I'm in the right trade and I should continue to let it run. So line charts not only help you with pivot points, identifying those highs and lows, but they really help you to stay disciplined. They don't scare you out of the trade.
Stanley says, Vince, when you're trading the hourly chart, how long do you generally plan to stay in that trade?
Usually for me, it's somewhere between 1 and 3 days. I'm trading those weekly charts. Now that's something you have to keep an eye on every hour to see, but generally with those higher price stocks, you're looking at 1 to 3 days that you're in that trade, right? So, but there's some big moves there.
Next question, Vince, do you like out of the money long call options?
I do for stocks that I think have the real potential to move, right? Or Forex or futures, whatever it is you're trading. You have to have that potential to move, which is why it makes it that much more important to be trading at new highs, right? Because say I'm, I don't know, let's look at a different time frame here. Maybe we see a different pattern. Okay, let's look at through in this section in here. So let's say for whatever reason I wanted to get in down in here. Okay? Whatever strategy I'm using calls an entry here. I look above, right? I see all this previous action. I know with all these previous pivots that there's a strong level of overhead resistance for me right here. So now what I need to decide is how likely is it to get up to that level? And if it does, how much potential profit could I make there? So if say this is a 20-point move, or sorry, a $5 move, and I'm trading the 20 delta, then I'm expecting to make 20 cents for every dollar move, more or less. And I know that changes along the way. It starts to climb, but let's just use that. 20 cents for every dollar move. If it's a $5 move, I'm making roughly $1 of profit, right? On that. That's my potential. If I were to go out to a 10 delta and it makes a $5 move, now I'm talking about 50-cent move. So obviously, the smaller the range here, the more in the money you want to go. Because if I can use a 70 delta and I'd be making 70 cents on every dollar, right? Now I'm looking at making $3.50 profit there, right? So there's that balance between the cost of the call and the return, okay? And how many contracts I can buy. So I want to go further out because they're cheaper and I can afford more contracts, but I need to have enough of a run to make it worth my while, right? So if I was breaking a high and had no resistance up ahead, I'd go even further out of the money and load up on contracts. Now, generally, going below the 20 delta range, you really need a sizable move to actually see a return. But even sticking with the 20 delta on something making a new high like that usually works out quite well.
Next question, do you use weekly charts for long-term trades, or is it strictly monthly?
No, I use weekly as well. Weeklies are very nice. So CMG here right now doesn't look great. I mean, it certainly looks like it's turned the corner, but it's pretty clear we need to break this high to make the next run. But weekly charts are great. I also follow them for an index, like the Qs, like the SPYs, right? And look at the Qs. Recently, just broke that weekly high, right? Last week. This week, we pulled back a little. Doesn't mean anything. So we're retesting that level. If this week we bounce again, we could be off and running big time, right? Remember, no resistance up ahead. The other thing you want to look at, just like you look for overhead resistance when you're going on, you want to look at support levels, right? You want to ask yourself, hey, if I'm wrong and this is a fake breakout and this thing turns, where is potential support, right? Or like we saw in the case of Boeing, is it going to free fall, right? Where is that potential support? So there is some in here, okay? Some in this area. So you want it close by. You want it close by. There's more in this area, right? So you want some support behind your trade, but you don't want any resistance overhead.
Let's go to GOOGL for Philip.
Sure. GOOGL, look at that. It actually came intraday here. Oh, no, sorry, that's weekly. So earlier this week, we had breached that high. We had gotten to new all-time highs and pulled back. So now let's wait and see if we can actually close above there that way. So on any chart, regardless of the time frame, you want to close outside that high. And then on a break of that high, that would be your entry. So on a weekly, we need to wait for this weekly bar to close. Unfortunately, it closed back below. So we're not there yet, but we're getting there. And that would look pretty good. That would be a real nice setup. There's the monthly, again, confirming no overhead resistance. So it looks like Google could be another play here in the next week or 2 weeks or so. That sort of thing. So Google's looking much better than it was a few weeks ago. Here's the daily chart.
Next question. Several experts are shifting to, quote, fractal charts and indicators, multiple time frames, traffic lights, etc. What are your thoughts?
I mean, there's so many out there, whatever works. One of the biggest things as a trader is everyone has a slightly different style. So what I may find comfortable may not work for you at all, right? You have to be comfortable with it and believe in it and understand it. Some of them work very well, those systems. Others don't. It's a matter of trying it out and seeing how it fits with your own style, how comfortable you are with it. That's all. But more than anything, I always revert back to the basics and trying to keep things as simple as possible.
Do you use interval 15-minute charts?
Sometimes, 15-minute can work out quite well. Again, you treat them just like anything else. But if you're in a 15-minute, a 5-minute, and you're, whether you're trading on options or the stock itself, you're not expecting to be in that trade very long, maybe a couple of hours, right? You're certainly expecting to be out of there by the end of the day. So it's something you've got to watch closely, right? So when you get below the hourly time frame, you've got to be in front of your screen to monitor that trade and keep an eye on it. That's the big difference. If you have the time to do that, then by all means, especially in periods of higher volatility like we've seen over the last couple of months, there are some great setups on the lower time frames.
Penny says, Vince, how about Amazon, AMZN?
Amazon has just been a monster. It's been such a strong stock. Let me go to the daily. All year it's just been moving higher. We pulled back the last couple of days. We're back to a light area of support here. I'd be on the lookout for some kind of reversal, but regardless of the time frame, this one has been fantastic. And again, if you just look at a break of the highs, right, more often than not, they take off, right? And when they take off, come back to retest, it's an even bigger opportunity. Those retests are key, okay? But Amazon's very strong. It should continue to be so.
An expert analyst said buy Electronic Arts EA shares because it's building a Netflix for video games.
Mm-hmm. And you can see it's another one at highs. Once it took out these recent highs here, there you go. I tried a few times, couldn't get above there. Tried here, broke through. Really has not looked back since. On its way. Looks fantastic. So with no overhead resistance, it can certainly keep going. And you can use other patterns, like if you're a candlestick expert or like to trade off candlestick signals, you look at what we see here now on Electronic Arts on the weekly. This is an inside bar formation, right? This week's bar, the high and low, is completely within the open and close of the previous week's bar, right? So all you need to do is mark the high of that bar last week. And whichever way it breaks out, that's going to be the next direction. Now, since this has been trending higher, we're only interested in taking a break of the high, right? If it breaks below the low, it doesn't mean we're going to short it, right? We're too conservative for that, right? But it means we'll look for another pullback into a stronger area of support and then look to pick some up along there. But let's say next week we see a bar that's still fully within here, and then the next week we see a bar that's fully within. The longer this goes on, the bigger that breakout should be when it happens, one way or the other. Okay, right now we have an inside bar formation. If it continues on, it'll be a multi-week inside bar formation. We still should be on the lookout for a break above the highs.
Another question from Trader. Vince, do you like out of the money long put options when you expect the stock price to drop? Same answer. I'm assuming that you're expecting
it is, but if you're looking for the like a new all-time low that has no support there at all, they're far and few between, right? it's much harder to find a stock that's hitting new all-time lows, because many of those issues, open up at very low prices, right, and then work their way up and then turn. So yeah, again, you've got to measure where the support level is, where that next level of support is, and see just how much room there is. So for example, here, Electronic Arts on the daily, if we say, well, it's going to drop, we should short it. Where's the next level of support? Oh, maybe right around here. So how much room do we have? Well, maybe we have about 6-7 points of room, right? And that will dictate how far out of the money you go, how much time to expiry you buy, all of those factors, right? But certainly if you can find a new all-time low that has lots of room, absolutely, I would treat it the same.
Greg says, Vince, I'm a big fan of Walmart WMT. Considering what you said about long-term strategies, does this fit your description of a good long-term play?
Well, this is the daily. Looking at the daily, obviously, we're not near the all-time highs. And it has been dropping. It's trying to find a bottom here. Let's look at the longer term charts. So you can see that once it had broken through here on the weekly, it went for a nice run, has now pulled back. Let's see the monthly. Well, yeah, so it's now, I would say, looking for support in the 80-ish area, 80, 81 here. Again, if we can bounce, that would be great. Where you're really going to see the next run is once it breaks this high. So, the way you want to treat it is, if it turns here, okay, you can start looking for setups on the lower time frames to get some plays in between here and this recent high. But the real opportunity is once it breaks that all-time high. So sometimes it requires patience, but it's just a matter of putting it on the watch list and looking at it once a month. That's it. Every month there'll be some setting up. See how long this consolidated? Look how many years Walmart was in a range, right? And there's really nothing on. Going on throughout here, from that move from about 45 to 60, which was that range, that $15 range. On the daily chart, there were opportunities. On the hourly chart, on the 15-minute chart, there would be all kinds of opportunities within there. But for those bigger moves, breaking out of that range is when you start to see some opportunity. The other thing to keep in mind is, how clean is this chart, or is it not very clean? Meaning, is it choppy? Is it trending strongly in one direction or the other? Not as clean as others, right? So don't get married to one specific stock. Look for the ones that, for whatever reason, are very predictable, have a very strong trend in place, and are breaking out at new highs.
Al says, Vince, speaking of puts, what do you think about selling naked puts on a high volatility stock? Can you explain with the August put, $16 on CORT?
First of all, I'm not a fan of selling anything naked. I would always cover myself, okay? So if you're going to sell an option, you want to make sure you do not have a lot of time to expiry. In other words, I would go maximum 30 days out, okay? So you're talking about the August. That's 55 days to expiry. For me, that's a little too long, okay? At the extreme, I would look at 40 days. Here we're at 55. So I would look at trying to sell the July before the August. But what you want to see is strong potential for the stock to go higher. So your put expires worthless and you keep that profit. So you always start with the chart. And if we look at a daily time frame, this right now to me isn't screaming high probability that it goes higher, right? It's choppy. It's in a range. It's not trending either up or down. So that puts you at more risk of a move going against your put position, okay? But let's say this was trending strongly and had just broken a high, very high probability it was going to go higher, so you want to sell a put. No matter what I would do is buy a lower put for protection. So say I sell the 15, collect the dollar, I would go in and buy a 13 and spend, hopefully, and this has a wide spread, but hopefully no more than 40 cents. So I could collect the difference of 60 cents, okay? But I'm protected, okay? If for whatever reason news comes out and the stock gaps against me, the maximum I'll lose is the difference between the spreads, which is $2 minus the 60 cents I collected. So my maximum exposure is $1.40. I could live with that, right? But if I just sold the 15 naked and it gapped down to $10, right? Now I'm fully exposed, right? I'm out $5 or more. So I always cover my shorts.
INTC is next.
INTC, sure. INTC, what was doing pretty well, recently pulled back and is now at a level of support. So we should start looking for any bullish signs here. Okay? We look at the higher time frames, still nice trend in place, nice easy pull back to a level of support. Look at the monthly, and there it is. But again, this is a stock, right? Intel, obviously, that .com boom, fantastic. When it turned around, there was no support, right? Or very little. What happened? It came all the way back. Then it consolidated for many years. But once it cleared the highs of that consolidation period, right? There it is. A much easier road to higher prices. So throughout all here, it struggled. As soon as it cleared all that overhead resistance, off it went. Okay? Next stop, 75. That's how I see it. Next stop, 75.
All right, Netflix on a tear. We talked about this when they released their Q1 earnings. Great seasonality on that. Tore through all expectations.
Mm-hmm.
It's been on a tear ever since. Look at that chart.
Yeah.
This is the kind of chart you want to trade, isn't it?
Exactly. So Netflix goes public, okay? And really throughout all here, right, was nothing. No one was talking about Netflix. There were a few speculators in there, but nothing really was happening, right? You break the high of that range and it takes off, right? Now it's starting to make the news. It pulls back. What does it do? It comes right back into support, right? Right into the top level of that. And it turns. So some of us as technicians, we can find reasons to get in somewhere down here, right? The winning momentum strategy is meant for that, trying to find an earlier entry. But if you want the no-brainer entry, you wait till it breaks the previous high. So it breaks the previous high and it goes higher. Now, we may say, hey, that was nothing. Like it just moved a little and failed. Well, it went from about 45 to 65. That's a $20 move. So would there have been profits there? Absolutely. We could have already started to scale out. Regardless, it pulls back, bounces again off support. Not once, but twice. But once it clears that high level, it takes off again. Pulls back. Once it clears this level, off it goes. So think about it. If you're in and you're wrong, it's a fake breakout and goes against you, you're going to get out fairly quickly, no matter what stop strategy you're using. The loss will be fairly small. If you sit through this, the gains will be much, much larger than your losses, and that's the key. This last play, okay, from the beginning of 2017. So what are we talking? A year and a half? A year and a half. It went from, even if we take the high of that bar as our entry, say 145. 145, it's sitting at 411, right? 300% gain. Still looks good to me.
All right. Unfortunately, our friend Barry Burns couldn't join us, but we do have our next friend, Dave Aquino joining us.
Excellent.
I'm going to give Dave the presenter controls, and then we'll give him a proper intro.
Hello, everybody.
Dave, can you hear us?
Yes, I'm here. Can you guys
How are
hear
you?
me okay? I'm doing very well, very much for a Saturday morning. Excellent.
Great to hear. Great to hear. We're going to give you a proper intro. We can't see your screen yet. If you can
Okay, give me 1
get
second
your
here.
screen going, we'll let you know when we
very
can
much.
see it.
All right, sir. Let's go ahead and get the control. Sorry about that, guys. Here you go.
No worries.
Yes,
Excellent.
we do see it now.
Excellent. Thank you very much.
Just give us a moment. We'll give you a proper intro here.
Go right in.
Okay.
Thank you.
Okay, so our next speaker is Dave Aquino, and he is a professional trader with over 20 years of real-world experience as a trader and a portfolio manager. He started his career at Merrill Lynch and eventually moved on to manage over $650 million in assets, specializing in options income strategies for Vanguard Asset Management. He is also a graduate of Vanderbilt University. Dave's a partner at MicroQuant and specializes in helping clients understand how to trade options for income. So Dave, welcome. And I do want to tell you that when we sent out our promotion for this event, and some of the people on our list saw your name as part of the agenda, I got some responses back thanking us for having you on because they've seen some of your presentations in the past and they were raving about it. They
Oh
said
my gosh.
that they loved your approach and that you usually provided some great content. So I'm really looking forward to this event and really glad you can be on with us.
Oh my gosh, there's some big shoes to fill. There's some expectations set there.
That's right. Sorry, just from a timing perspective,
Okay.
you've got 45 minutes, so you can go until about 1 p.m. Eastern. So.
Perfect. I think I can absolutely do that. Vince, thank you very much for that. And thank you very much, both of you, for the kind introduction. I love what I do. We love what we do at Basecamp Trading. And Basecamp Trading is the evolution of what we do at MicroQuant. Used to be known as value charts, and we've been doing this a while. I think that's why we got that positive feedback. And I try to talk about this particular subject as much as I can, because it's one of our core ways of trading in my particular trading room. I believe it's something that can offer a very good, consistent way to win in the markets for our traders. And I really enjoy teaching traders and interacting with them, because I admire you all's entrepreneurial spirit, that you're not waiting for the markets to provide for you. You're trying to get from the markets your whatever you can based on your skill and ability. So again, thank you very much for this opportunity. So the name of my webinar is Generating Income from Options and Consistent Wins and Big Growth Trading. I have a couple of quick risk disclaimers, but I'm not going to read them verbatim. We all know that trading is risky, right? And we're not supposed to use the rent money or the food money. So we want to be careful with that, and just let us know that past performance is not necessarily indicative of future results. So again, that was a very kind introduction. Thank you very much, guys. I am a partner and head of options trading at basecamptrading.com. I've been doing this a long time, 23 years as a broker, an investment advisor at the Vanguard Group. I'm sure some of you have been exposed to our mutual funds. I was in the ultra high net worth asset management group. My job was specifically to take, ultra high net worth household, their long-term equities, and generating cash flow off of that with options. They never wanted to sell it. The cost basis was way too low, and a lot of attachment to it. Great grandpa's GE stock. You're not going to sell that. We want to hold it for our grandkids. So, but they still needed income, and that's what I did. The fact is, I wanted to branch out on my own and being in the markets for 15, 16 years, thought, hey, I can be a trader. So I joined Basecamp Trading and evolved as a trader, and took my previous experiences and of generating income and options trading, and became a trading instructor, a mentor, and a coach. And that's why I think we got that positive feedback from that Vince had just given us, is that we really enjoy creating strategies that help traders make a difference in their trading life. And personally, I get so much satisfaction in seeing my traders prosper. I have one example in my webinar here. His name is Jim, and he's a kind old gentleman, CPA, and he's doing phenomenally. And he said it was okay for me to share his story with you. It just reflects on the ability of the way you can structure a program that really allows you to flourish as a trader. Okay, so just going into some concepts that we normally approach the markets with is, a lot of traders really want to make a good go at either doing this as kind of a side income, or maybe becoming full-time. Maybe you're retired and now you're in charge of generating your own weekly, monthly, yearly income. Now what do? Everybody, a lot of people turn to the markets, because with some skill, they believe that we can do well. Maybe we have some individuals that are tired of their current professions. I can't tell you how many doctors, lawyers, people that have sold their businesses, and high level CEOs and managers that have retired. Now they're in charge of their trading, and they want to become what we call a professional trader, someone that doesn't just dabble in the markets, but actually actively makes money on a regular basis. So we call those pro traders. What separates them from everybody else? Because it's a really small portion of the market. What a pro trader does is they really seek to maximize the profits that they are seeking in the market, and balance the risk associated with it. They have confidence in their approach. Now, I know a lot of you are here because you're here to learn maybe some new strategies, get some tips, and in your trading, maybe learn about an indicator or two. How confident are you when you approach the markets now? Do you feel good on a regular basis? Do you feel good when you enter a trade and know where it's going to go, and have a good probability that, yeah, this is going to work out? How consistent are you in those gains? Now, I know a lot of you get emails from, gosh, everybody saying, hey, I'm turning, $1,000 into, $99,000 in the course of 6 weeks. I'm like, okay, yeah, I can't imagine how much risk you're taking with that approach, but, good for you. How consistent are you in your gains? The strategy I'm going to talk to you about today, you're not going to hit a home run. If you're going to hit a home run, I'm going to like slap you on the hands like and tell you you're doing the wrong way, because you're not supposed to hit a home run. We want you to be consistent in your gains on a regular basis, slow, steady, methodical progress on a regular basis. So, but that's what pro traders do. It's almost like they flip a switch and they can generate a consistent revenue stream of profits in their trading. So why is trading for a living so hard? And then this is like, you're on your own. It's you and the markets, and anything you can glean from TV or the internet. Now you're responsible for generating your own living. Why is it so hard? Well, let's talk about the markets. From day to day, month to month, it's really hard to tell. Are we in a bull market? Are we in a bear market? What time frames do you trade? For the past, 10 years, we've been in a bull market, but I'm sure that there's some instances where it doesn't feel like it. Are we in a bear market? Are we going to enter a bear market now with all the talk of trade wars with China? Or are we in a dreaded sideways market? Those are the ones where you feel like you're in the washing machine. You get spun around, turned around. At one point it looks like everything's bullish and going higher, and all of a sudden something erupts and we're falling. So it's really choppy, and it's hard to get a good idea of where we're going. Kind of like right now. So the markets make trading difficult. How about timing? A lot of people talk about different time frames. You have intraday traders, you have swing traders, they're trying to make money every 2, 3, 4, 5 days out. Then you have longer term traders that maybe go a month out, and you keep finding yourself switching back and forth between all the multiple time frames. How does that affect your strategy and what you're trying to do? And how about the trades themselves? Do you go into the market like a big game hunter, knowing exactly what you're looking for? Do you really? Because I know a lot of traders that come to our programs are just jumping from thing to thing. They feel so overwhelmed because they're inundated with all these different strategies. Okay, so and then let's say you do find a strategy or a trade setup that you're looking forward to. Are you entering the trade correctly on a regular basis? Are you managing the trade as you're in it? Are you exiting properly with, are you getting stopped out? Or are you holding it too long? Or are you getting into a trade, you make a little profit, and all of a sudden you're so surprised you have money, you take it off and you're happy with your $100. And then when you look at it in the next day or so, it could have been $1,000 or more. Those kind of questions always make it difficult to have us trade. And just even if you get all three things right, doesn't mean your trade is going to work out. And what does that do to your psychology? So trading for a living is difficult. You have to have a process. Okay, that's why I want to put out there is that you need an income trading system. Okay, the reasons why we call it an income trading system and why you need it is because it serves as a foundation to a lot of your trading. Just think of it like this: if you were building a business, and this is how you should think about the trading. If you had a reliable source of income, maybe you just sold widgets and your widget sales were very consistent every week, every month, bringing in X amount of revenue, then and more than enough to cover the bills to run the regular business, you would feel a level of freedom that you could put new products out there, try and tinker new things, and do basically what you want. That's if you're adventurous. If not, you just keep selling widgets and enjoy your life because it provides that baseline level of income. Okay, and that's the way we think of an income trading system. It actually relieves your pressure to perform and hit those home run trades. Have you ever been in a situation where you're looking at it like right now, you got a week left in the month and maybe your account is negative for the month? And you're really trying to have a consistent cash flow in your accounts. Now you have the pressure to like, oh man, I have to really trade well this week so I don't actually show a negative number on my account. Or man, I'm really behind this week. My account looks terrible. I really need for something to happen to have that kind of a good week. So when I show my spouse the statements, it doesn't look so bad. Okay. When you have an income trading system, you don't worry about those things because, again, you're generating returns on a regular basis that serve to be that foundation. And the income trading system, the hallmarks of it is it has to be consistently repeatable. Okay. Now, if I told you that, hey, I have this really cool trade setup, but it only comes around 3 times a year and once on the summer solstice, do you think you can depend on that trade? What happens if you miss one? Okay, you need something that you can do again and again and again on a regular basis. Our income trading system is based on expiration. And you know that we have expiration and options every week. And in some cases, we can use an intra-week expiration for our benefit. The other aspect of it is has to be high probability. Okay, you want a high level of win rate. Let me put it this way. I know we at Basecamp Trading always talk about risk and reward versus win rate. If you get your equation right, you can be a consistent trader. Well, let me tell you, even with a 60% win rate, please, doesn't the 40% hurt? Doesn't the 40% of losses kind of make you wonder, are you doing the right thing? Psychologically, it's tough. Anytime you take a loss, it does detract a little bit from your confidence. And as a trader, you need a high level of confidence. So high probability trading not only helps you monetarily, but psychologically. It really makes a difference in the way you feel about your trading and the way you approach trading. And it makes a tremendous amount of difference in the way you look at what you do now as a trader. Okay? Just keep that in the back of your mind, because I mentor a lot of people and they discount that particular aspect, but it's extremely important. The next thing is it has to be dependable profits. Okay? You have to make your car payments every month or they take your car. All right. You have to make your IRS payments every year, every quarter. You have to, when you go to the grocery store, you don't go to the grocery store just because you had a 100% gain on a stock. You go to the grocery store because you need food on a regular basis, and you have to have those dependable profits to generate that revenue. You have to have an income trading system that's proven in many markets. Okay, you have to be able to generate an income in trending markets, whether they be bullish or bearish, or in the sideways market when things are more uncertain. And some weeks you win, some weeks you lose. You have to be able to create that income. Okay, you must be able to depend on it in a reliable way to make money. That's the kind of the bottom line. You also have to have an idea how much you can generate. You can't generate on a regular basis 1,000 this month, 3,000 next month, 500 the month after, and then 2,000 the month after that. Can you imagine going to work and getting a paycheck with that kind of variability? How are you planning? How can you plan to make your payments? Okay. So it must be consistent and you must have an idea of how much you can generate on a regular basis. And in generally speaking, you have to have a relatively small risk, okay? Because again, this is something you rely upon and it has to have high probability again. And then you have to have confidence in it. This is where high probability again comes back into play. You have to have high confidence that what you're doing is going to have the results that you need. Because in a way, your home, your food, your car, everything you live off of depends on it. Okay? So let me just ask you this question. Okay? How many of you have heard this particular statement before? Over 80% of options expire worthless, right? How many of you have bought an option, thought that the stock was going to move, and just kind of watch that option deteriorate, and eventually maybe it moves your way, maybe it doesn't, but it expires worthless, okay? 80% of options that are created expire worthless. Now you should think about it as an opportunity. Who gets the other half? Who gets the other side? If I'm buying, who's selling? Because that's the side I want to be on, right? Doesn't that make sense? I don't want to be in the camp of the 80% of the people that lose. I want to be in the camp of the 20% of the people that win. Okay? So that's the foundation of what we do in our income trading system. All right? We utilize credit spreads that have a high probability, and benefit from time decay, theta decay. Options are a depreciating asset. And as long as you understand how they depreciate, you can take advantage of it. Okay? What we try to do is consistently generate 4 to 6% profits per trade. So I'm sorry to disappoint you if you're looking for a 25, 30%, 70% gain on a trade. That's not what we're looking for. I actually consistently tell my traders in my trading room, when there's an opportunity for a 7, 8, 10, 12% trade, okay, the way we normally do it, don't take that trade. Pull back a little bit further, take the more conservative trade, and opt for the smaller return. How many of you have ever attended a webinar in this format and someone tells you to take the smaller return? You never hear that, but I will tell you that right now, because reward and risk always go hand in hand. What we want is the higher probability trade. We want to win more often, period. Okay? We do this in our income trading system, 3 to 5 trades a week. 3 to 5 trades a week, again, generating on target 4, 5, 6% per trade. Over the past three and a half, almost 4 years now, we've done over 620 of these trades, folks. Our average win rate is over 93%. 93%. Okay? And we have it down pat. It is a step-by-step trading program, and we reinforce this every other day in my trading room. Every other day, because we have them on again and again and again. And what we try to do is master what works. We're not trying to add newfangled things to it, try to tinker with it, try to juice it up a little bit. We don't want that. We want a solid, consistent foundation of consistent revenue on a regular basis. Okay? So again, we don't want to reinvent the wheel. We want to follow a step-by-step income trading system that works. Okay? So my income trading system is called 11-hour options. Okay? I've been promoting this program for well over 3 years. I'm going to show you some results, and you're gonna like, wow, that's crazy. It is so consistent, and the vast majority of the traders in my trading room do this. Okay, it is a proven, consistent way to trade options. It is a credit spread trading strategy that we implement several times a week. It's been proven in different market environments and calendar seasons. Guys, I've experienced 11-hour options in this big run here with President Trump being elected and the markets running higher almost consistently all of 2017, and then here January 2018 we hit the rough patch. We pulled back. Here's a best example. Here's my chart. Here is even let's just take October. You see how consistent that is? Well, anybody can throw darts and make money in a bull market. But what about this drop? What about this pullback here? Back and forth. How about the volatility we've just been experiencing right here? All these markets, especially right in here when it's extremely choppy, April, May, going into June, 11-hour options have performed phenomenally, and I'll show that to you. Calendar seasons. You go through summer. Summer is different than, say, a winter season or, tax season, very first part of the year. All these different markets, all these different conditions, 11-hour options have performed very, very well. Again, consistency. Guys, listen, if I told you, and remember I said a 93.8% win rate. Let's just, for make it really easy, let's say that's closer to 95. Imagine this: you have a mountain in the distance. My brother went and did the Appalachian Trail, and so he's coming up from Georgia, and he's going to New Hampshire, I think is where it is, the end point, and you can see the mountain in the distance. And can you imagine a progress of taking 2 steps forward, 1 step back, 2 steps forward, 3 steps back? Doesn't that sound like you're trading right now? How consistent you are in your trades? How about instead we make progress like this? Take 19 steps forward, folks, and 1 step back. 19 steps forward, 1 step back. How eager are you to take that next step? Because even though every once in a while you're going to take a step back, you're going to make such tremendous progress that you feel ready for that next step. If you knew when you bobbled a trade that the next 18, 19 are probably in the books already, aren't you going to get up early and take those steps because you know you're going to win? That is a completely different mindset than traders that enter the market and just hope. Okay? Consistency breeds confidence. And the profits that you get, again, average 4, 5, 6%. In the 620 trades over 3.5 years, we're making more than 5% per winning trade. Okay? It is a high probability strategy. Again, we're looking at 90% plus. The strategy and the way I've laid it out, the step-by-step methodology in selecting the trades actually increases that probability of success. There is an overnight trading focus. Now, I don't know if you're like me, but a lot of times I dread the fact that I don't know what may come up in the next couple of days. A lot of my traders say, Dave, where are we going to be in a month? I have no clue what the president's going to do in a month. Are we still going to be in a trade war with China, or are we going to be holding hands and doing well? You know, I know the economy is doing well, but if we're in economic situations that complicate it, the market may tumble. I don't know in this progress how we can do it. Now, the nice thing is 11-hour options limits your exposure. And I say, as an example, Thursday into Friday. Now, we've actually evolved this strategy. We can do it multiple times a week. But again, it's an overnight trading focus. We're using a swing trading time frame, like a 60-minute chart. Okay, the 60-minute chart allows us to read the markets clearly in the time frame that our 11-hour option strategy works. The fact is, it's not intraday trading, even though we utilize an intraday trading chart to kind of pick and choose our entry points. However, it keeps us in tune with a time frame that can handle some of the news volatility that we're in. What we're doing to increase the probability of success, and this is extremely important, because one thing we focus on is teaching our traders how to read the charts extremely well. We're talking about price momentum and support and resistance levels and how we can utilize that for our benefit. And then again, our income trading goal primarily is overnight time decay, but I'll tell you, because we can read the chart pretty well, some of that is because of delta, okay? So when we sell credit spreads, maybe you have some idea of selling credit spreads. We have to look at the charts slightly different. We have to focus on selling away from the projected price difference. It's kind of like when you were a kid and you were in school and you played keep away, where you had the ball. Or, you see the, if you're hiding in the corner and you see everybody go to the right, where do you go? You run to the left so they don't see you, right? You're trying to escape. So that's what we're trying to do with our credit spreads. We want to think about where will prices most likely not be at expiration. Here's a very good example. Let me get my ink color the correct way. So we see price action falling right down here, okay? And it's breaking through some support levels. Momentum is going down. We get like a reversal pattern here, inverted head and shoulders. You see the turn in momentum. When we see that turn in momentum and price goes up, and we're looking out maybe a day or so, and we see price moving higher, don't we want to sell a credit spread here? That's where we want to sell our credit spread. So price is moving away, and it's going through these support and resistance levels. Then we enter a channel. We consolidate again. And then we have a breakout move. You see the momentum very strong. Well, guess what? Let's sell a credit spread down here again. Why? Because you have a break of resistance, price action goes higher, momentum confirms the bullish direction, so everything's going up. We sell away. We sell a credit spread down here. Prices come up, we get a double top. We call this a bearish divergence in my room. Price starts to drop, momentum goes down. I'm going to kind of draw out of the box. We sell a credit spread up here, right? Prices going down. Then we hit another consolidation pattern. We break lower, momentum breaks lower here. Guess what? We sell a credit spread up here. Again, it's a mind shift. We are making money because we're staying away from price. The nice thing is if we're wrong and price kind of goes sideways like this, or even kind of goes up like this, as long as it doesn't touch us in the allotted time, we get to keep all that premium. Does that make sense? That's how we trade it. And again, last but not least, we're in a channel and all of a sudden something happens, price breaks down here, you sell a credit spread up here. Okay? Just as long as it doesn't touch us. You're selling away is what we're trying to do. Okay? Again, profits come through time decay. As time passes, that's the only thing you're certain of. Time will go forward in this particular dimension. You make money. Consistency, again, is the goal. As often as possible, we want to win. We want to maximize our profit with a balance of reward and risk. Remember, if you approach me and saying, Dave, we can make 10% on this trade, I'll say, guess what? You're not going to do it. You're going to sell your credit spread further away. Okay? You're going to get further away from that price. And again, it's everything. It's laid out in our program. You don't have to think about it. And you're always looking for a reasonable, consistent amount, and that allows you to balance your risk. We're going to have good risk control. This is very important because if you're taking those 19 steps forward, those of you who know credit spreads, you know the reward risk is not the best in your favor. You have to be able to limit that. So if your loss starts to get too big, you need to exit the trade. Why? Because you're going to take 150 trades in a year. Who cares about 4 or 5 trades, folks? It's not going to matter. You want to limit the bad trades to very small loss. So if you're taking 19 steps forward and you take 1 step back that's equivalent to 2 or 3 steps, you don't care because you're going to make up for it in spades. You're just going to keep marching forward. I think about it as an army of ants making that steady progress forward, forward, forward. Every once in a while, you'll have a little bit of a loss. It just doesn't matter. You keep moving forward. It's like a wave going forward. All right. So let's talk about some of the bottom line results. This is my friend Jim. Okay. He is very kind. We did a boot camp in Dallas back in October of 2017. And Jim had been trading with us for over a year. And he approached me. Did I see 2018? I think I have the wrong year. Sorry, guys. We haven't had 2018 yet, 2017. So Jim was in the boot camp with us, and he said, Dave, I love that 11-hour option strategy. I understand it. I've been dabbling in it, but because I met you in person and I did a really good presentation on some advanced strategies, he said, I'm going to commit to it. Let's see how it goes, but I'm only going to do it in the S&P 500, which is fine. That's my personal core vehicle also for this strategy. I'm going to trade 11-hour options and just in the S&P. I said, okay, I want a good balance, reward risk, and good stop loss levels. Basically, he's doing the program exactly like I tell him. And this is actually an old slide. I have some results from November, December, and January, but I actually have a whole lot more I'm going to share with you. The key is this. Jim was conservative. He wasn't trading his whole account. He was trading about a third of his account in this strategy. But he was doing so well 3 months into it, he contacted me. And he said, Dave, I want to show you some of my results. Okay. And the fact was, he's still trading it now. All right. Through the months of November, December, January, February, March, and April, Jim had 0 losses. 0. And I will show you some of the statements. This is... I used to have the dates. I think this is, I say November. This is December, 19% return. Here he makes about $4,700 on $27,000 of assets. And here he makes 38.3%. I believe this is January. And this right here, I want to really emphasize. This is actually the month of May. And he's got a couple more statements coming to me. But this transaction, he's really started doing well. He said he'd been doing it long enough. He had a lot of confidence, and he actually had a family issue that he had to take 2 weeks off in May. So I'm going to show you 3 accounts that he traded in May for 2 weeks. 2 weeks. This is one account. He made about 16.5% or $3,200 on about $19,000 of assets. Okay. The next account, $4,340 on about $44,000. So this is about a 9.7% return. Okay. And this is the third account in May. He made $3,176 on $28,552. I know I'm throwing a bunch of numbers out at you, so I'm going to show you the results in this. And just in case you didn't catch all those 3 statements, Jim traded 2 weeks in May across 3 different accounts that totaled $92,000. He generated $10,803 of profits in 2 weeks. 2 weeks, folks, trading the S&P 500. Okay, that's 11.65% growth in 2 weeks, and that's more than the S&P 500 does in a good year. How would you like to get 11.5% return in your S&P 500 index fund in a year? Jim did it in 2 weeks. Okay, this is the text he sent me when he forwarded that email. Had he been trading the whole month, he would have generated close to $21,000 with $92,000 account. Okay, think about that. That's in 1 month. Now I have to hold Jim back sometimes because we're working on a strategy in an advanced class that he is part of. And what we're doing is we're taking a lot of those gains and what we call generating reserve accounts. So basically the 92,000 that he's trading, our goal is to take half those profits every month and put it in a reserve account of about $100,000. So after a while, he's going to have several reserve accounts with $100,000 in each, so that in case there's any difficulty with his primary trading account, he'll always have a reserve to generate $10,000, $20,000 every month, whatever he wants to do. It's that consistent. So, I mean, that's part of his goal. He really wants to get to that level, and he can do it. And he's been only doing this since October last year. That's just a very small example of how he's done it. All right. So again, the question is, do you need a income trading system? Do you want to be able to maximize the profitability factor in your trading? Not taking too much risk, trying to hit those home runs, but being able to generate a consistent income. How about increase consistency in your trading so you feel good about your trading? And then how about that confidence like Jim, that I have to actually hold him back? Don't do too much, have some reserve, because can you imagine how he can grow if he was going full tilt and investing everything? I mean, I'm holding him back just so we actually get to the point where we talk about what is enough. What is enough? You can keep generating, but you don't have to. Okay. Again, a lot of you already told me that you said you've heard this before. 80% of options expire worthless. Now you have a chance to be in the profitable 20% and do it with a tremendous amount of success. Our 11-hour options workshop is available now to you. It's going to teach you how to make a full-time weekly income by being in the market a third of the time if you only trade the Friday expiration. It's a consistent, high probability way to make money on a regular basis. You can do it as a set it and forget it strategy, and you can manage itself with stop loss levels. I give you the step-by-step method to select the trades themselves. The risk control method I told you about, or the 2 times or 3 times loss, I explained that in detail. That helps you become full-time profitable over the long term. And again, the fact is you can do this consistently 52 weeks a year. There is no off weeks. Actually, my favorite time to do this strategy, Thanksgiving. I'll tell you about that in the workshop. But Thanksgiving is great because it's an 11-hour options trade. We say that because we're exposed to the markets about 11-hour options, 11 hours every trade. That's about a 8-hour option trade because of the early close. So let me show you really quickly. I'm going to run out of time here. Our results specifically in the last 7 months. These are the assets we've been trading. This PDF is all our trades here. October, we went 16 for 16. This is what we call a delta neutral trade. You can see we had a loss in the spread, but we had a gain in some additional options that we added to it. So we actually netted out here about $400, $500. So that trade actually counts as a win, but you can count it as a loss. So it's 15 out of 16. Make this a little bit bigger. These are actually very close to what this is a very neat version of what I use in my trading room. But here, November, we went 13 for 13. These are the actual trades we took. Here is December, we went 16 for 16. Here's January, we went 15 for 17. These are the 2 step backs. I was trying to get $250 in this trade. I ended up with a $770 loss. This one right here, same day actually, trying to get $200, we had a $240 loss. But you can quickly see over the next week or so, we made that up a lot. And we went eventually 15 for 17 in January. Here is, these are the number of contracts and the spreads that I took. You can actually take more if you want, and Jim definitely does. February 14 for 14, and remember that chart I showed you. This is the choppy part, up and down. Here's February, March, April, May. Okay, so see all that market volatility? Keep that in mind when I show this to you. February, we went 14 for 14. Here is March. We went 15 for 15, and here's April. We went 17 for 17. Okay, I haven't updated this in a couple of months, but someone said, well, okay, that's nice, Dave. What about now? Here's June. I just went back because we're almost through the month. Here's June. This is actual spreadsheet I use in my trading room. Winner, 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 winner. Here's the 11th, winner, 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 and so on and so on. Here is yesterday, and here's the trade we have on for Monday. Okay, that's what I mean by consistent winners. Would you get out of bed every day knowing you have that? So here's where you can get it right now. If you go to www.bctnow.com/credit, we can do that for you. The link is right there, www.bctnow.com/credit. It is the workshop, it is on demand. You can have it and be trading it by Monday. We're going to throw in 1 month of platinum membership because we review and do these trades all the time. We'll actually send an email out when the 11-hour options trades get published. That usually goes out within 15 minutes of me calling out the trade. We actually have a trading app for your iPhone or Android. You can get that immediately from the time that I put it out there. Total value of the program is well over, $443. Guys, I'm here. Somebody asked about the platinum membership. Again, there's an email you get, an iPhone, Android, access to trading rooms, daily videos, and member-only sessions. Total value there is $97. But today, If you go to www.bctnow.com/credit, it's $49, folks. Okay? Think about it like that, $49. Why so cheap? Because we want to give you a tool that you can use in the markets to make a difference. Okay? If you need help, you can go to support@basecamptrading.com. We'll get on the phone and help you out there. Really quickly, someone goes, you know what, Dave? It's still I'm a little iffy, and I want to break it down for you this way, guys. If you do one trade alone, and you can pull out $100 profit. That's not too much to ask. You can probably do that with a couple of $1,000 with the way we've been winning. So we take one trade, it's $100 worth of profits. If you take 2 credit spreads a week, you can generate $200 a week. Doesn't seem like much, right? You do this for a year, it's like $10,000 or more. Okay, that's how the numbers roll, and that doesn't even count compounding. Trust me, by the time you do this a month, you're trying to look for money under the couch to put into the account because you want to trade bigger size. That's why I have to hold a lot of traders back. But again, that is how consistent it is. I've shown you like 8 months worth of returns already. Okay, so again, I guess the question is, are you ready to take advantage of it? Are you ready to be in that 20%? So take advantage of it today. www.bctnow.com/credit. Again, you'll be part of our trading room. You'll get the emails. You can ask questions, and a lot of our traders are honestly as good as I am trading the strategy. They've been doing it that long. And Jim is actually one of the traders. You'll see him in the trading room. And there are times when people will ask, "Can we do 11-hour options now?" And you'll see a list of people. They're picking the same trades I do. They don't need me. They just like to be in there because they're with a group of people that are winning and doing well. So, are there any questions? I mean, this is as straightforward as can be. It's now up to you. You can keep doing what you're doing and jumping around, or you can join us and have the consistency, have the confidence, and have the success in your trading that you're probably looking for. I mean, it's $49. You could go to Longhorn Steakhouse with your wife today, spend more than that, or you can invest it in yourself and reap the results. I think you're going to find if you take that leap of faith, it's going to make a profound difference in your trading. So hopefully I hear from you. If you're new to the room, if you need anything, you can always send us an email if you have a question. But really, folks, just a couple of hours, learn the strategy, give it a try, paper trade it. I think you're going to be very, very pleasantly surprised and excited to go.
Dave, thank you very much. There are some
Vince.
questions. I think I can maybe forward them to you, but we've
Sure.
got to get to the next speaker. We really
That's no
do
problem.
appreciate your time.
Thank you,
A
sir.
couple of positive comments. I do want to say one of our members said, Dave, you tell him this. I've been following this process since Feb 2018 and have made over $23,000 so far.
That's excellent. Thank you, Vince. I appreciate it. And thank you, everybody. Have a wonderful weekend.
Thank you, Dave. All right, our next speaker is Troy Epperson. While we get him set up, I'll have Vince read his profile. Troy, can you hear us?
Yes. Can you hear me?
How are you?
Good. Thank you.
Excellent. Good to have you on. So everyone, our next speaker is Troy Epperson. Excuse me. In the early 1990s, Troy started trading for a well-known hedge fund. Then he became head trader on a proprietary trading desk. And in 2003, he started successfully trading his own money. Besides his full-time job as a trader, Troy is one of the top instructors at NOFT Traders, teaching futures and stock traders how to use order flows to earn full-time professional trader incomes by trading with the institutions instead of against them. Troy, I'm looking forward to this presentation. Thanks again for being with us. I can see your screen now. So without further ado, I'll turn this over to you. Thanks again.
Appreciate that. Thank you very much. Hope everybody can see my screen and hear my voice. I actually can't see the questions box, but that's okay. We'll live without that.
We'll turn those on for you right now. You should be able to get that up.
Real interactive thing, so anybody can ask questions along the way. It certainly doesn't bother me because we're going to spend the next 45 minutes doing very little pitch and very much education. So if you have questions, you're welcome to go ahead and put those in the questions box. I'll try to keep up with the questions and try to also keep on track time-wise. Before we even get started, though, I'm going to tell you what I'm selling. And so you don't have to wait until the end. Pretty simple. We're selling an order flow advantage product. It's 2 specific tools that includes a 10-day video course. It's for $99, and there is the link for that. Now, a lot of people go, why do you even talk about this up front? Well, I don't want to waste anybody's time. And if you're interested, you can check it out at that link. You don't have to stay all the way through the webinar, but you'll see this now and you'll see this at the end. And in the middle, we're going to talk about order flow and how order flow can dramatically change the way you see the market. Now, we're primary futures traders, but we also have this same product is also available for Forex as well. With that being said, I hate to start with a negative, but many of you may have seen the statistic. According to Berkeley Haas Business School, over 98% of retail traders fail to ever break even using indicator-based trading systems and traditional retail trader methods. I think of trading as almost the same as like the restaurant business. There's a quote in the restaurant business that 95% of all restaurants go out of business. That's crazy. Absolutely crazy that their statistics is so high, that failure rates are so high. And the question is why is that? And I believe it's because we don't have all the information. So we're always trading with sort of like one hand, fighting with one hand behind our back, so to speak. So that being said, I want to take a look at what you are probably doing and using. Most everyone that I know uses a candlestick chart. And I have used a candlestick chart for years and years and years. But it's pretty limited as what you can see on here. You can see the open, the high, the close, the low, and that's it. Sometimes you put a volume, maybe put volume on, add a simple moving average on the chart, and that's it. That's our extent of our technical analysis. Sure, we can put other indicators on, but almost all the indicators are put on a candlestick chart. That's sort of the mainstream. Well, what if you could take the candlestick chart with a moving average, except that, you know, how do you trade a moving average? When it goes above the moving average, you buy it. When it goes below the moving average, you sell it or you fade it. Lots of different strategies for just trading a simple moving average. Now, before you get freaked out that I'm going to spend the whole time talking about moving averages, I'm not. Okay, this is just a super basic way to start. We're going to use some other methods along the way that I'm sure everyone is familiar with, because the point here is that what I'm going to show you works with any strategy. And that's the beautiful part about it, is order flow works with any strategy, because it gives you an extra piece of information that you just were missing out on before, and it's actually a way to confirm your system trade. So if you're a simple moving average guy, a Fibonacci guy, a pivot point guy, you name it, this is a way to filter your trades to make sure you're taking the right trade. And just because you get a signal doesn't mean you have to take every signal, and this will help you take only the signals that are the highest of probability. So I want to move from this screen directly to, this is the exact same. So if I go back, you'll see the moving average line here, and that's right in here. We're just taking a blow up this, but we are using a different kind of candlestick. This is called a footprint chart, and this is not new or earth-shattering. There's plenty. We have competitors that have a similar type product, but order flow, how you use order flow is so important, and the education that we provide is part of what will differentiate between just someone who uses order flow and someone who's successful, is how they use it. So you can see here on this moving average crossover line, if you're playing when it goes above the line, you're going to go long. You can see that that would have been a bad trade because it didn't continue to go up. But if you were looking at the order flow, you would have seen that the order flow didn't confirm that just because it moved above the moving average, we should go long. Okay. So first, before I get too deep into it, let me turn my mouse. And I have to apologize in advance. I love drawing on these charts. And we're going to go through, and I'm going to give you a very quick primer on what order flow is and how it works. So you'll notice that, first of all, each one of these is a candle. Okay, so here's the shape of the candle. It's really actually very large. It has a little tiny tail on it. It's a red candle. Here's a green candle. Again, you can see the shape of the candle. It's just that these candles have information inside them. And so where does this information come, and what does the information mean? At first you look at this, you go, oh my God, how in the world can I handle seeing this much information? Well, you can see we've got reds and greens and blues. We try to make this information as happy, as easy to read as possible, because it is a lot of data. So where does the data come from? Well, we can split a candle right down the center, okay, right down the center, and we'll have two sides. There's two sets of information within a candle. The left-hand side is the bid side, and the right-hand side is the offer side. And I can't write with a mouse. But that being said, this is coming from time and sales. So whenever an order gets executed, one contract flows through, it gets executed on the bid, it's going to get put into this box at the appropriate price. Okay, so this is telling me that 491 contracts were executed on the bid at this price during this candle. So it's not super complicated. The numbers come from time and sales. Well, what is time and sales? Time and sales is where every single trade gets reported, and it's the old ticker tape. Remember, we used to call it tape reading, reading the tape. That was time and sales. Well, as volumes increased dramatically over time, the guys who were really successful trading were the Jeff C. Livermores, those guys from the 1900s, early 1900s. They were tape readers. They were experts at reading the tape, which is another way of saying they were experts order flow readers. But as you know, if you've put on a time and sales window, whether it's TradeStation, NinjaTrader, whatever, on the ES particularly, that thing screams by super, super fast. Extraordinarily hard to get a handle as to what's going on. When I set one up, I filter it so it only shows me 10 contracts or more. Otherwise, those little onesies, you got just scrolling so fast, you can't make heads or tails of it. So in an attempt to modernize, for lack of a better word, order flow and tape reading, footprints were developed. And this is basically a summary of the footprint, I should say, a summary of time and sales. So we can see the contracts that were executed on the bid and were executed on the offer on the two sides. Now, why is this important? All of you should be going, why is this important? And it's pretty simple. What happens when an order gets executed on the bid? How does it get filled? First, you have to have a guy on the bid saying, hey, I'll buy it here at this price. And that guy is very passive. He's not aggressive. He's just sitting there waiting, going, I'll buy it right here. Just come on. Anytime you want to hit my bid, hit me. He's passive. A seller, on the other hand, can do two things. He can either sit on the offer and wait for someone to take his contract, or he can get impatient and go ahead and hit the bid. All market orders are going to hit the bid or hit the offer. Okay, so market orders are aggressive. And even a passive or someone who's very impatient is not going to wait around and hope he gets filled on the offer. He's going to go ahead and hit the bid. So the bid becomes aggressive selling, and the offer side becomes aggressive buying. Now everyone used to be going, whoa. So I can actually track aggression. Who is the aggressor? Aggressive sellers or aggressive buyers, by seeing what they are actually doing. What are they doing? They're hitting the bid. The bid number starts going up. They're hitting the bid. What's going to happen when there's nobody left on the bid? Price goes down, right? Pretty simple. Same thing on the buy side. Once all the aggressive buyers take out these passive sellers, it goes up a level and price goes up. So how price moves is determined by who is the most aggressive, because he who is the most aggressive is going to be the one who moves the market. They will take out the sellers or take out the buyers, and price moves. So now we can say, I'm not looking at numbers here, I'm looking at aggression. And so the way I think about price movement is totally different. I'm looking at aggression. What is aggression? It's behavior. Behavior is predictable. Great example, I have a 9-year-old, and I'm sure a lot of you people have kids as well. And if I want to make a point, I say, Max, don't touch the stove, it's hot. Now he could either listen to his dad and not touch, but you know what's going to happen. As soon as dad walks out of the room, he's going to touch the stove and he's going to burn himself. Now, is that behavior predictable? Yes. If you have kids, you know exactly what I'm saying. You almost have to use reverse psychology and say, go ahead, touch the hot stove, burn yourself. Then they won't do it. But if you say, don't do it, they're going to do it. Their behavior is predictable. Okay? Why do we do technical analysis? Because price is a form of behavior, and we're able to see that it repeats, and so we see repeating behavior. That's why technical analysis has blasted onto everyone. Everybody's a technical analyst, because we're finally smart enough to say, hey, it's not random. It's not random. It is behavior. We just have to figure out what behavior is going on. And a candlestick chart is going to allow us to determine what behavior is happening, particularly at inflection points. So when price comes back up to the moving average, do I want to short it here? Because maybe the moving average will be resistance. Well, I can take a look at the order flow here, and I see right here at the top, I see some numbers. And remember, this is the aggressive buy side. We got 1232, 1076, 460. What? Oh, wait a minute. Let's now you engineers out there, what's happening? The numbers are going down. That means there's less action happening as price is going up. At one level, there's 1,200 contracts. We go a little more expensive, it's only 1,000. We go a little more expensive, there's only 460. What happened to my fearless buyers that were going to try to take out this high and move this thing up? Well, the fearless buyers are not as many as there were earlier. Now, something that's really, really cool, this number right here is called the delta. This is a summation of aggressive sellers and aggressive buyers in a single number. So the aggressive sellers get a negative, buyers get a positive, and this is the net of that. Now, very, very interesting that you would see a negative number. Well, it makes sense. What is this, a red bar? Yeah, price is going down. There's more aggressive selling going on. Totally makes sense. Notice the red number right there. Notice the red number right here. These are called sell imbalances. This is when the aggressiveness is overly done and it highlights. It says, hey, look at this. We've got an extra amount of aggressive selling taking place here. Need to pay attention to that. Well, if I've got buyers that aren't buying, are buying less, and I've got sellers coming in at a much higher ratio, this thing's not going up. It's going to go down. And you don't have to be a rocket scientist to figure out that when the buyers stop buying and the sellers start increasing, that a shift in momentum, a shift in direction is going to happen. It's going to be on our way to do it here. All right, so that's a basic primer as to what order flow is. So let's take a look at some additional examples. So first of all, the numbers, we talked about this, comes from the time in sales or from a level 2. And it flows from time in sales, it flows from the order book as the order gets placed to time in sales and into these different boxes. Again, the offer side versus the bid side. And that's where those numbers come from. And we're not making these numbers up. Another huge advantage is that this is completed orders. Okay, so I know a lot of you guys like to look at the Super Dom or the trade station, they call it the matrix, and it shows the order book, or some people call it even a ladder, a price ladder, where it shows the different orders that are going on. And a lot of people will obsess with looking at that and trying to read that, but that's got a lot of baloney in it. Okay, because remember that I think I saw the statistic was 92 or 93% of all orders are canceled. I'm going to let that sink in for a second. So all the stuff you're seeing on that order book, those numbers are gyrating. 90-something% of those get canceled. The real money only happens when a transaction occurs. So it's sort of, that's the posturing, that's the trash talk. When it actually happens and there's a transaction, that's where the money flows, and it has to make a difference, right? With the money flow, not the talking, money where your mouth is, right? So this is money where your mouth is. These are actual transactions. So this is really, really solid, super solid information, and that's where those numbers come from. Now, if you're a Fibonacci guy, well, here I've drawn a Fibonacci from this high to this low, and most Fibonacci traders are going to be looking for a retracement from this bottom point to the 38.2 fib, maybe the 50 or the 61.8, and they'll park orders at these levels and hope that it comes up, touches it, and then retraces back in the other direction. Well, let's take a look. This is the exact, here I've blown it up a little bit so we can see. So at the 38, really didn't retrace very much, did retrace pretty decently at the 50% fib. Well, let's take a look at what it looks like when you can actually see the order flow. So as it's coming into the 50 fib here, here's the 50 fib, look at this, 2098, 811, 411. Say what? Yeah, as it's coming in here, this thing is not going to go up. Look, there's no buyers. The aggressive buyers are slowing down. They just can't get any momentum going on. And what happens on the next bar? Huge imbalance. Sell. This is where I'm entering. I'm entering as soon as I see this sell imbalance. And these are always, you're always going to be looking at more than one candle. Lots and lots of information. Also, another really cool thing, this delta is positive, but it's a down bar. It's red. You should be going, wait a minute now, how can it be a down bar? In fact, this bar closed on the low. How can it be a down bar and have net buying? This is saying on this bar there was net buying of 214 contracts on a down bar. Every one of you should be going, that makes no sense. That makes absolutely no sense. A normal bar, down, red bar, negative delta, up bar, green, positive delta. Totally makes sense. If price is going up, there must be on balance more buying than selling. Well, occasionally there's going to be an anomaly. And we highlight this anomaly. It's called a delta doji. Delta doji. Now, what we found is that this scenario loves to happen at tops and at bottoms. So it's like a huge, look at me, get ready, a change in direction is coming. A change in direction is coming. On this top right here, there's a delta doji. Love it. Crazy. One of many little idiosyncrasies or anomalies that order flow can assist you with, giving you a heads up. Now, many times it'll be one bar after or maybe one or two bars before, so it's not something I'm going to use as a entry signal, but I'm certainly paying attention to take a look at it. Say, hey, pay attention, looky here. This is saying a change in direction is coming. Very, very cool. So Fibonacci, yeah, you could park your order here, and yeah, you could get run over. It could just keep on going up. This is going to okay, a delta doji. It's based on the delta. Remember that a doji candle is one where the open and the close are the same. Okay, it shows that there's indecision in the market. Well, when for a delta doji, it's basically saying a change in direction is imminent. It's basically what it's saying. Always fun. Okay, so that's a Fibonacci. So you're a Fibonacci trader? Awesome. You don't have to change what you're doing. Wait to take the trade after you see the confirmation that the order flow is saying, yeah, this is a retracement spot. Absolutely is a retracement spot. All right, let's just, for fun, let's just back up a little bit. I'm going to erase everything here, and let's look at the 38. Okay, so if you're a Fibonacci trader, you got an order sitting right here, and it gets executed right here, and what happened? You got stopped out. If you had a tight stop, maybe you had a 20 tick stop, maybe that'll work for you. Most people are going to bail out. It's not retracing. But all we have to do is look at the order flow itself, and you'll say, dude, I'm not taking this trade. Look at the delta, 25.97. I'm not taking that. It's too much. There's too much buying going on here. Okay, look at the buyers. That's not declining. Okay, 21.83, 26 getting greater. Okay, yes, at the very top there's less, but on balance it's not declining. Yes, I have some sellers coming in. That's all those Fibonacci guys that are trying to get in right under the Fibonacci, and guess what? It's not going anywhere. Big buy response immediately following that. Big buy response. Not seeing what I need to see at the 38 in order to take a short. We come up to the 50, I see what I need to see. But taking your Fibonacci method, you're going to be able to enhance it by not taking this 38 trade, but yes, taking the 50 trade. Double tops, my favorite. Here's a double top, and this is within the range even. It's not even a true double top, it's an intraday double top. Well, actually, this was 9:30, so yeah, that's intraday. So let's go that spot right there. How do you know it's going to reverse at that double top? I love fading double tops. There's the double top. What are we going to be looking for? We're looking for a sequential decline. 1641, 1318, 290. Aggressive buyers are not. Well, what else do we have? A delta doji. On balance, we have positive buying, but the price went down. So this is a delta doji, again, right at the very top. Another anomaly, imagine that. Very interesting that that would be the case. So DJ, delta doji. Being able to look and see how the candle is formed is going to add so much to the picture. Now I can see what's actually going on in real time. What's going on? Are the sellers selling? Are the buyers buying? If I want to short, I want to see the sellers are becoming engaged. Here I can see that the buyers are not engaged. There's some selling. There's some selling. Here's my entry. You wait until you actually see the sellers start to come in. Now, sure, you could fade the double top and put your order in right there, but how many times do you get run over when it's just a false double top? Where the power comes in is where you say, okay, order flow, it's great. How's it going to actually impact my trading? What's your average loser? 10 ticks, $125 on the ES? What if you could just cut out one loser a day? Starts adding up real quick. What does it also do for your confidence level? It boosts your confidence level, so when you see a setup where the order flow is confirming this double top, maybe you take 2 contracts instead of 1. Guys, with trading, it is just as much about confidence and discipline as it is about the method, maybe even more so. So if the method gives you more confidence, more discipline, it's only going to enhance your trading. Double bottom, my second favorite. And I say second favorite because I trade to the short side. Okay? I trade on the short side, so I love taking shorts. I'm not a huge long fan. But that being said, okay, so here's the double bottom. So it's coming back, it's coming down to test this level. 824, 818, 603. Now, one of the things that is showing here, so it's showing me the sellers are getting tired. And we can even see this in the preceding candle. 2449, 1,357.40. Remember, the left-hand side is aggressive sellers. The right-hand side is aggressive buyers. So it had 2 candles back to back where we have the sellers just aren't being very aggressive. Now, what's really interesting is that see that 603 right there? That's a sell trap. So you get these every once in a while. Usually very close to bottoms is when they are the best. You'll see there's one right there as well. That's also a sell trap. And let's see. I don't see any others. This is when there is a large number of people, traders, that are piling in at the very end. See, these are the guys who think this thing's going to break down. And when it doesn't, you get a very quick move to the upside. This one here is actually really aggressive volume that's coming in. So when I see this, I'm not at all ready to pull the trigger on the buy side. I'm going to wait. Same with right here. You got a very large number right here at the very bottom. Again, I'd be waiting. This is actually what we call a pseudo trap, as it's not on the very bottom. It's on the next to lowest level. That being said, when you start seeing heavy volume at the very bottom here, these are the guys who are late to the party. These are the guys that are shorting the lows of the day and buying the highs of the day. And they get shaken out. And it creates a those guys are the weak hands. They're the last ones in and they're the first ones out, and you get a dramatic move. So this thing's got multiple things going for it. We've got a couple of traps here. So we've got trap traders coming in here. We've got sequential decline, sequential decline. We finally get some buyers coming in here. Takes a little bit. On this one, I'd be pulling the trigger a little bit early, probably somewhere in here. But you can definitely pull the trigger after that green number right there shows up, showing you that you have what? A buy imbalance. And the buyers are coming in strong now. Price is going to go up. Pivots. I don't know how many guys are pivot traders. Support, resistance 1, the actual pivot, support 1, support 2. Yeah, we can do the same thing. We can evaluate whether this support 1 is going to be a good level. Let's look inside of what's happening when it comes down to this level. I got sellers coming in a big way. That's not where you want your order today. S1 is not going to cut it, all right? And all you have to do is sit here and see the massive amount of selling going on, massive amounts of selling coming on. And as it comes into that level, it's not letting up, man. There's just more sellers. They're following through. The sellers are following through. Very, very interesting to see. You can see all of this. You know, if I had an order parked here, I'm canceling it. I'm going to go down to S2, somewhere down lower, and see if that's the spot I want. Because this ain't it. Fortunately, if all you're looking at is a candlestick, you're not going to see any of this. You just see the big bar coming down, sure. But you're a pivot point trader. You're going to put your order right there, and you're going to get run over. Because the order flow itself is saying, we're not done selling. We are not done selling. Now, what's interesting is that this bar right here is saying, we're done selling. Negative 12,000 on the delta. 7 by 1. There's 7 red numbers versus 1. Haven't talked about that. That is, we call an imbalance summary. When it's 7 to 1, this is exhaustion. Okay, we're going to bounce. Just a matter of time. Usually it's within 1 to 2 bars. Here, missed it. Missed the bottom here by 1 bar and maybe 3 ticks. So that's not too bad. Whenever you see an exhaustion bar, huge delta, 7 by 1, my brain goes, okay, get ready, Troy. Bottom is coming. These guys can't maintain this level of selling. This level of selling is out of control. It cannot maintain it. So the pendulum is going to swing the other direction. Call this an exhaustion bar. We actually highlight this. Okay, so Scott's asking a question about the Delta Doji. You don't interpret the Delta Doji. You don't care whether it's positive or negative. We just know that because there is a discrepancy when you have a down bar and on balance buying, vice versa, you have an up bar and on balance you have selling. We don't try to interpret that. All we say is that's an anomaly that's out of whack. It's out of balance. Okay, so you don't try to say, oh, it's a positive Delta Doji, therefore that doesn't work. Okay, it doesn't work. All it does is the Delta Doji's value is it says a change in direction is coming, and it can be positive Delta Doji or a negative Delta Doji. It doesn't matter. Okay, it's just saying, hey, everything that's going on this bar is out of whack. Okay, so yeah, I mean, I totally agree with you. You would think that if it shows that there's buying, that would mean that the buying is what's really going on, right? The price is going down, but really buyers are buying. Therefore, it's going to go up. You can't make that connection when it comes to these delta dojis. Trust me, I have tried. You're better off closing your eyes and not trying to interpret why that anomaly occurred, just the fact that the anomaly did occur. And I can tell you that that's the best way to take a look at it, okay? Trader has a question about the volumes of the type of the higher the volume instrument, so the ES, the ZB, the ZN, anything with huge volume, order flow is going to be very organized and it's going to be easier to trade. Thinner, crude oil, British pound, are going to have thinner volumes, Canadian dollar. Thinner volumes, much more difficult to read. You have to have a better skill set, but the order flow still, even on thin markets, the NQ, great thin market, still is going to give you a piece of information that you never had before. And when you take that information, add it to whatever you're doing, whether it's a pivot or a Fibonacci or whatever on this next slide, I'm actually making fun. So I said we have a black box. I randomly put in some special secret line 1, special secret line 2, special secret line 3. Oh, and this one's a super special secret. So that you could just say, it doesn't matter whether it's a black box signal service, you can still evaluate each one of these potential entry points, whether they're breakouts, whether they're reversal trades, whatever, you can still evaluate each one of those at the point, and decide whether you're actually going to take that secret special line signal or not. You know, in this one, if it's giving you a long at the secret special line, hell yeah, I'm taking this trade. Why? I got green, massive green momentum as it's coming into this level. Yeah, I'm going to take it long, sure. If this was saying take it short here, fade it, hell no, I'm not taking that. That's a stop out waiting to happen. Look at the momentum coming in here. So it doesn't really matter what your system is, what your method of entry is. You can always confirm, yes, I want to take this trade. No, I don't want to take this trade, because the order flow either confirms or it doesn't confirm the direction of your trade. And that's really, really cool. We've never had this before. We've been stuck on candlesticks and indicators that are what? Price-based, right? Most indicators are price-based. This is order flow. This is order flow behavior. This is a chart showing me aggression. And I want to be on the side of aggression over and over again. And there it is. Now, I've mapped these out on these secret special line, sequential decline, buy response, more buy response. Yeah, it came down. Had a little bit of pain on this one, maybe 5 or 6 ticks, but then more buy response, more buy response. This is the bottom. Your super secret line, awesome signal spot. Awesome signal spot. Of course, if it was telling you that if it breaks below this, says it breaks below, you want to go short? No, big loser. And the order flow would have said, no way, you're insane to go short. Absolutely insane to go short. So it is a way to enhance your trading. And there's the last one. Again, this one, here's one where you can see the momentum is actually increasing as it comes to the trigger point. 931, 1325, 1740 through 1755. What is that? That's called seller acceleration. Not only is it a big badass looking down bar, but let me tell you, there's some serious selling going on the downside. This thing is not going to stop here. And if this is saying short, yeah, I'm jumping on board trying to get short. So it's going to confirm your position here, whether you're a contra trend trader or a bounce trader, however you want, or a breakdown. It's looking to break down. It's going to help you determine if that's actually the case. Does the order flow confirm that that's actually happening? Yes, sometimes it sounds like it looks like we are mad scientists. No, we're just order flow traders. Old way versus new way. Old way, candlesticks. New way, taking all that information from the ticker, putting it in a format that is now readable. Okay, if Jeff Z. Livermore was alive today, he would not be able to read the tape, but he would be an order flow footprint trader because it's the same information just displayed in a way that's actually useful. Time and sales is junk. It's too fast. You can't read it. Take the I can't, the 98%, and change it to an I can. Take that frustration, get rid of it. Take a chance, 99 bucks for Order Flow Advantage. This is an introductory course. I can't overemphasize that. Okay, that's why it's $99, because it is an introductory class. It has a 10-day video course. Very comprehensive education comes with it. You get 2 tools. You get the Order Flow Visualizer and the Order Flow Pattern Spotter tool. There is the link right there. Let me see if I can go back and get some questions. On futures, the smallest candle I would recommend is 8 price levels. I actually want to have, let's go back, we'll see what I'm talking about here. I want my candles here on average to be 8 to 12 price levels, okay? Once you've, a good trader wants to retake the course. You purchased it before. Yeah, you still have access. You can retake the course as many times as you want. Yeah. I can try to put the, let's see. All right, I'm going to try to put the, there you go. There's the link. It's in the chat. We have a TradeStation version that is, it is not available at this time. We have our Mac Daddy product, it's called the Institutional Edge System, is available for TradeStation, and the order flow do you work with TOS? Thinkorswim? No Thinkorswim. It is specific to 2 platforms, Mike. It's either TradeStation or NinjaTrader. Those are the 2 platforms that we currently have. It certainly can be used for swing trading, Sheldon, because what it's going to do is it's going to help you dial down to a lower time frame and get a better entry. So on you guys who are swing traders, you can enhance your entry by maybe 10, 15 ticks. Yeah, and I would dial down to a 10-minute or maybe even a 5-minute chart on to actually get my entry on a swing trade. No, there's no plans at this time for Thinkorswim. I don't know. It's not part of the TradeStation app store. No, it is not. No TC2000. You can get these numbers for weekly, but they are not really usable. Okay, so it's really, I would not go more than a daily chart. I would not use these numbers on a weekly or a monthly or yearly. Okay? I would only use these on a daily at the largest time frame I would put them on. Think about the range. You'd have one bar for a day. That would be 300 ticks, just crazy. Would not be usable. Interactive brokers, you can use TradeStation through interactive brokers. MT4 and MT5 are we're definitely working on adapting to those. That's coming down the pipe. Jim's question, I'm not sure what chart you're referring to there, but yes, so you can use this information to feel, like for instance, you want to do a continuation of the trend. So actually it's come down, it bounces, you can use it up here to get your short entry, to get in the direction of the trend. Yes, absolutely. Fantastic questions.
Troy, can I just ask you to repeat that link where people can join? I'll put it in the chat box, so for folks that are interested, they can just simply click on it.
Absolutely. Oops, went too far. There we go. There's the link. http://safeclick.co/OFA.
All right, that is in the chat box now to get Troy's special offer. We want to thank you very much. Great presentation.
Thank you so much. Thank everybody for their time, and for $99, it's a pretty low risk proposition.
Absolutely, and it was fascinating. We don't often see something like that. So that's great. Thank you so much for being with us this morning. Okay, that concludes the session for today. As a reminder, everything was recorded. We will be sending out a recording to everyone. The links for the offers today are in the chat box. We'll leave that up for a few minutes. And as always, if you have any questions for us here at Trading Winds, you can reach us at info@tradingwinds.com. Otherwise, keep an eye on your inbox, and we'll notify you when those recordings are ready.
It's a good session. Another one done.
Mm-hmm.
Summer of 2018, well underway. Longest day of the year, 2 days ago. And as I was saying in our market chat, when you're having a tough time as a trader, every day seems to be the longest day of the year.
Right.
How do you get over that? How do you get over a tough loss?
Oh, it's all the mindset. I mean, it is part of the business. It really is. You got to think of losses as a cost of doing business. So your main job as a trader is to control them. You are not going to eliminate them completely. It's a matter of controlling them and keeping them as small as possible. That's one of the things that I think you should always work on and get better at, is minimizing losses. But you're never going to eliminate them completely, as much as we all want a holy grail. You don't need to be 100% perfect to make money in these markets.
Somebody had put in the chat box earlier, he was saying that when you become indifferent to wins and losses in your trading, you know you've arrived as a trader.
Absolutely. You know what? One of the best things to do is not think of your trades as money. In other words, when you enter a trade, don't think of how much can I make on this one, or how much should I expect dollar-wise, right? Focus on your rules and living by those rules. In other words, I always tell my members to create a checklist. All the criteria that you want to see before entering a trade, separate them all, put check boxes beside each one, and if you can check off each box, you've covered everything and you're good to go with that trade. If there's even one check mark missing, then you shouldn't enter that trade. So you should always focus on execution, not on the dollars. The dollars will come. if you just follow your rules.
All right, good counsel as always. That's 30 plus years of trading advice there, or trading experience that's coming at you, Vince. At the end of each of our pro market chats, we always like to do a trivia question for you because you're tired.
Yes.
So we feel like we have a bit of an advantage. We usually like to go to the world of sports or pop culture. Today, I'm going to take you to the world of company names.
Okay.
Amazon.com started its life as what name? Abra Inc., Cadabra Inc., or River Inc.?
I'm going to start by saying I have absolutely no idea, so
Right.
I'll just randomly select. I'll go with the river.
No, actually,
No?
one of our members,
Really?
members,
Cadabra.
Cadabra Inc.
Interesting.
And one of the reasons they changed the name was because whenever they would call someone for sales-related issues, they would say, "Hi, I'm so and so calling from Cadabra Inc." And people think, "Cadabra Inc.
Yeah.
What are you guys selling?" On that happy note, we did put all of the links to the offers from the speakers in the chat box. We hope you can join us for our pro event, which is for leaps and long-term trading. It's tradingwins.com/leap, LEAP. Any questions, comments, concerns? We always love to hear from you. Your feedback is appreciated. info@tradingwins.com. We want to thank you for joining us, whether it was by phone, over the web, and from around the world. There's lots of people from places outside of the US. Great to see that. England, Belgium, Singapore, a couple of people from Africa as well. Nice to see all of you. And we'll eventually be back for our members with a pro update tomorrow. And we'll be back with our next market chat on Monday. If you'd like to join us for that, that would be great. In the meantime, have a terrific weekend. Happy trading to you. We'll see you soon.
Thanks, everyone. Take care.